All right. Welcome, everybody. This is CyberBulls. Thank you for joining us. We've been doing this show now. What is this now? Episode 38. And if you look back at episode one, it was pretty sad what we were doing there. But if you check it out, it's a show about investing and it's a show about Tesla. And it started off with three of us having very different investing styles. I am the long-term kind of investor. Christian has always been a momentum investor. And Xander, who's just joined us now, he is a long-term investor who also dabbles with options. And then we've got Alexandra and Jeff joining us. So we're going to find out why Christian sold his stock in Tesla. Oh boy. Okay, Christian, let's go. Let's start with you.
So, we've been talking about it, and anybody that watches the show over the last couple months have known that I've been, critical. I've been critical of management. I've been critical about some of the guidance that have been done on the calls, and anybody that watches the show week to week knows that I haven't been actually very happy with what's going on. So, not to make it a long story, but again, if you followed the show, I was an investor in 2019, did very nice well with the stock, sold a lot of it up in that trillion area market cap. And then I've traded it. So I bought it low, sold it a little bit, bought it low. I've done well. Sometimes I don't do as well, but essentially a lot of the gains kind of were made. So after it went in the low hundreds, kept buying. I think on the show I talked about it. Says we're going to buy some down here, a good chunk, and it had a nice run up. And being the macro it is, and knowing that, I'm not worried about FOMO. I didn't think it was going to run away from me, so I sold a lot of it again. Still had a position, but not what it was, because it literally moves like 100% or something like that. So took some gains there, and now I'm kind of trading it. But over the last week before earnings, I didn't think the earnings would go very well. Again, if you listen to the show, I don't think margins are going well. I'm not a big fan of the new strategy about volume over profits. And you could say, well, Elon might not go to zero. I get it, but he keeps talking about it. So when Elon talks now, I start to believe him, because what he says looks like sometimes it's going to happen. A lot of what he says doesn't happen when he guides, but I believe that he's going to grow volumes at the expense of profit, which is fine for long term. But in this macro, I'm not a lover of any stocks, really. I own some stocks, but it's very, like I said, I'm very bearish here in the short term for the overall market, including Tesla. And because the Fed, I think, is still going to continue to raise rates, and you see the market down today a little bit on more recession talk, I just said, you know what, my position isn't that big. I really don't like what I'm seeing. And I decided, you know what, I'm just going to sell it and I'll wait. And it doesn't mean in a week or two that I might change my mind. It doesn't mean if macro improves, I don't change my mind. It doesn't mean, if I start liking a little bit more what Elon's doing, less of the, the Twitter distraction that I'm not a big fan of, to be honest. Like, now that I own the stock, have at it. Do what you want. Say what you want. Do whatever you want. Like, I don't own the stock, so I don't really matter. Not to say that's going to have a huge influence on the stock, but, it might. So, at this point, I'm going to wait and see. And I think Tesla is a great company. I appreciate everything they've done in the past, and I'll continue to monitor them because I find them fascinating. At this moment, though, in this particular moment, I'm just not an owner of the company. So it's as simple as that. So I hope that kind of made some sense a little bit.
Christian, we got a comment here saying, Eric says, Christian has now been relegated to Cyber Bear. You told me you don't agree with that. What's your thought?
No, I'm not a bear. So I don't own it. So I guess technically, in the sense, you could say I'm a bear, but I would never short Tesla. I just don't own the stock at the moment. And if Tesla comes in and the price gets down more, the valuation, and the macro improves a little bit, I won't hesitate to put on a position, maybe a very large position again. It just really dictates to what I see in macro, because I personally, I know everyone disagrees. So what you said in the beginning, Herbert, when we first started the show, I looked at it and it was great. We looked a lot younger, me, you, and Xander. And what we said, and you said it exactly perfect. We're a show on Tesla. We're a show on investing, which I am. I was never an all-in Tesla investor like you guys, or like mostly all in. And what else? Also life in general. Like, how do we think about life? So we were a show that we're going to do a lot of things. So we branch more towards the Tesla universe, which is great because a lot of people are interested in that. But again, I love the investing game. I follow other companies. Tesla's been amazing to me, and I'll never forget the 19, 20, 21 and into 22. It's just an incredible company, and they were executing on a level I've never seen before, and it was just amazing, and they were so locked in. And I think some of the focus, just in my opinion, has been lost a little bit. I think there's a little bit of distraction. I think there's a little bit of mixed messages from management. Again, this is just my perception. This is not financial advice. This is a show we do. And if people get value out of it or think differently of it, or maybe I shouldn't do that. And I get comments all the time saying, wow, I didn't think of it like that. Oh, that makes sense. Well, that's completely wrong. I'm not here to give anyone judgments. You can listen to all of us, and then you could kind of take a little bit from each of us, or you could take none of it and just say, hey, I think you're completely off the rocker. And that's fine too. I don't take anything personal. So that's the opening. That's kind of where I am. I think we're going to have a fun show. And yeah, that's it.
I got a couple more questions, and I'm going to open it up to everybody. But question one is, did you sell all of your Tesla stock? And question two is, are you buying other stocks that you think is a better investment today than Tesla?
So I do have other stocks. I've been trading. So also, I'm very bearish in the short term. I just said that. I'm actually in a lot of T-bills. You can get treasury bills at 5%, pretty much risk-free on the short end. Money markets, I see money markets I have 4 3/4. So basically, you're just sitting there and you're getting paid. And yeah, it's a little bit of a gamble because if the market goes up, yeah, I'll miss some of the gains, but I'm not that worried about it because I've done really good over the last, few years when we had this huge run. And then I've been investing way back, and I participated in a lot of market gains. So, I'm not super worried about the market getting away from me in this macro. I think we're going to see pullback. So I'm just making a macro call that the market will come back to me. And really, the market to me is very highly valued. I look at all these stocks. Like I said, I'm trading some of them, and if I see some green, I'll sell them. I'm not hesitant to sell them. We're up 8%, up 9%. I'll just take the gain. I'm not worried. I'm not playing a long-term game right now because I think we'll get better prices in the future. That's just me. Again, this is not financial advice. This is just what I'm doing. Everyone is different. Everyone has a different circumstance, a different time horizon. They're playing a different game, a different investing game. But right now, I'm heavy into T-bills, mutual funds, ETF, T-bill equivalents, stuff like that. And I trade some stocks. I mean, I don't know if you want me to mention them, but they're not huge positions. They're not huge long-term positions that I have right now. I'm very liquid.
Did you sell all?
I sold all. But that doesn't mean next week I don't buy. I told you that.
No, I didn't know if you sold all.
Well, what's the point of having a little, like once I get down to a little bit, I'm not one of these people that, I got to hold a share on. It's gone. Once I decide it's gone, it's gone.
We could learn a thing or two, huh?
I told you I'm not happy. I'm not going to hold on to a stock for sentimental reasons.
I'm actually okay if you had said that, I'm going to trim here, I'm going to trim there.
What do you want me to say?
No, you're going to do what you do. I'm just saying
I know, but what's the matter if I own 400 shares, 1,000 shares, or none?
I mean, the two of you are exactly the opposite, right? Herbert, you're very mission-driven, long-term, forgive anything to management, don't question much. Yeah, no, you do. I mean, come on, I can throw anything at you. You always have an answer. You do. And Christian is exactly the opposite. He couldn't care. I mean, I'm sure you love the mission, but you couldn't care less about going to Mars or clean energy for the rest of the world. I think you like it, but that's not your investment thesis, right?
Exactly.
Your investment thesis is, this is a stock price, and I have 3 months, 6 months, 9 months to get money out of this, and let's see, maybe only 3 days, right? Let's see whether it's worth it or not. And you just consider Tesla a volatile stock that will give you some opportunities when it's going down, and that you'll trim once it's up. It's just, and both those profiles can exist, and I think both those profiles should exist on CyberBulls, because if we only address I'm sorry, Herbert, don't take this personally, the cultish, mission-driven Tesla investors that don't take any short-term reality check into account, which I can completely, I can understand. It's not my vision either. I love the mission, and I am certainly much more long-term than Christian, but I really don't like that people criticize each other in our universe. We have about 5 different investment profiles in our, I don't know, 250, 300,000 Twitter people that follow Tesla a lot and interact with each other. And one thing that really gets to me is how those different opposing poles really are on each other's necks, right? What the heck that I comment on Ross doing this and that, and everybody goes, oh, the quicker he's out, the better. I don't want to hear from him. Well, if you don't want to hear from him, block him, mute him, whatever. But let everybody do and express what they want to talk about, and get over with it. So, Christian, I completely understand where you come from. If I would only look at short term, I told you last week, I didn't feel that earnings call. I sold half of my 401k, not to go into other stock or into T-bills, just because I really didn't feel comfortable. I had no clue where the average selling price was. I mean, if I can't start with an average selling price, how in the world can I pretend I analyze a company? I mean, I know other people do, but I can't. So once I don't feel comfortable on a part of my portfolio that I want to preserve, I'm 56, I need this money in 10 years. I thought, you know what, take it out and just wait until you get back in, and rather miss an opportunity on the upside, but have some security in the downside. So I'm starting very, very slowly to go back in. But I understand that people in the very short term have an issue and will have for the next 6 months. I mean, Jeff and me were a little bit less, Jeff is a bit more optimistic than me, but I honestly believe this call was subpar. They were not as prepared as I wish they would have been. And we have now suddenly these 2 focus targets for which I think there is just not enough respect. There is not enough respect for the shareholder. Tesla doesn't care about the shareholder. And if you're a shareholder and that bothers you, well, you may as well think that maybe you're not at the right place. It's just not a priority for them to look after the shareholder. And the second that bothers me much more is they don't seem to have a focus on extending their client base. They think the client has to be an intelligent person that finds Tesla, that understands the price, and you better get there and you understand it and you'll be happy with your car. Well, I wish the world would be like that, but it's not. So these 2 pain points in the short term, I feel them very well. And if I wouldn't have money that I can spare for the next 10 years and add to it gradually, I would actually be upset as well. If I would already be at retirement and I have people reaching out to me that are retired, they're saying, you know what, I bought at 400 and this is supposed to pay my retirement months. These people have a pain. I mean, at 160, they have a problem. And so I just want to advocate for the fact that we just respect that everybody has a different horizon, a different attitude to it. Wonderful for the ones that are mission driven, but please respect also the ones that are investment driven and may have a shorter or medium term horizon.
Yes, something we mentioned very early on was that Christian his duty is to preserve the capital, and I found Christian on what's that app called
Clubhouse.
that nobody uses anymore?
Clubhouse.
Thank you. And the reason we gravitated towards each other was because of his ability to make a decision that's contrary to drinking the Kool-Aid and staying in, perpetually. So that was the advantage of spending time and talking to him and learning from him. So I think it's very foolish to think that just because the show is called CyberBulls, with a little $sign in it, it doesn't mean that we're not going to be logical and think things through. That's the entire point of getting together and looking for the red flags. And if something comes on the horizon that is dangerous, you're supposed to react. We're taught, don't time the market, all the stuff under Christian's tweet today. But that's true in the long term. In the short term, there are opportunities. And, if anything, I think a lot of people blame them, other people for decisions that they didn't make or that they did make. So I think for me personally, I just blame myself for, drinking too much Kool-Aid. Like, I'm an all-in investor who sold my house and put it into Tesla, and my average price is like $258. So that's obviously being at 160 doesn't feel good, but I don't blame anyone else except myself for making that decision.
Well said, Evander.
Yeah, Jeff, do you want to go next?
So but I do.
It looks cleaned up. Jeff, do you want to go next? But I do want to come back to my answer to some of the things that Alexander said.
Yeah, no, absolutely. A couple things on the stock. First off, it's been alive for 13 years. And if you look at the highest percentage gains, I think you can count them on weeks in terms of those runs. Some of the runs are longer than others. But I do believe it's kind of a dangerous, if you're, you can probably come in and out and get 10, 20% gains. Sometimes you can get lucky and catch a whole big run. I'm sure it's possible. But if you look at this stock, you've got to, my philosophy is kind of to have a long position, but then if there's edges or fringes that you want to trade around, like when Christian said, it gets up to $1 trillion or 1.2 trillion in valuation, there's times you may want some liquidity, and those are good times to take it when you see it mooning like that. And I agree with Alexander's statement too, that everybody should have the kind of flexibility to manage their position. Everybody's got a different time horizon. Everybody's a different type of investor. You can still be kind of pro Tesla and what Tesla is doing, and manage your finances. There's nothing wrong with doing both. But getting back to it, I actually believe there's two macros happening, and I haven't been able to put my finger on it. And I don't think anybody has, by the way. If you remember last year when the stock was dipping towards 110, 100, and everybody going into the new year was like, tech is going to get killed the first half of the year. The S&P is going to dip, to all-time new lows, maybe 3,000. The first half of the year should be bad. The second half of the year should be better. That was everybody on every single network was saying the exact same thing at the exact same time. And when that happens, in my mind, that means alarm bells should actually go off when everybody's saying the same thing. So I think this market, there's two macros happening. Right now, the market's chopping around. But if you look at auto, for example, I was, first off, the GM results, they're mixed. This morning they came out and they reported there's a mix, but in general, they're not ballooning inventories. Okay, their volume growth. When you do their comps, it's kind of a strange thing to comp against because the last 4 years have just been littered data. So I went back to Q1 2019, and there was a relative about a 10% drop in units. I was just looking at North America. China, there's a much bigger drop, but the average transaction price went from about 37K to 51K and change. So I think there's two macros happening. I think there was a glut of cars a couple years ago, and then this inventory burn off, and then these supply issues. And now I think a lot of people are buying cars. These companies are beating and raising multiple quarters in a row. So that confused me a little bit regarding the Tesla guidance. And it just, like Alexander, I've been writing down my thoughts, and my thoughts have transpired and changed, since earnings. I keep going back and forth. But I'll be interested to see Ford's earnings next week. But I believe there's two macros happening. I haven't been able to put my finger on it, but I kind of believe it's a dangerous time to be for me, whipping my whole portfolio in and out. I wouldn't do that. I'd probably be trading. But again, this is what makes a market, and this is, investors. Every investor is different. So I don't fault, Christian 1 minute for making decisions about his portfolio and what he needs to do with his names. That's totally fine. But I do think we should talk about the issues. I do think we should get into the earnings call as well, and what was said and how that could be interpreted multiple ways, which is actually what you don't want as a company on an earnings call. You don't want 5,000 interpretations of what you said, but that's happening out there right now. So, Herbert, I'll turn it back to you. One other thing I'll finally say, we are, as a Tesla Twitter community, we are drowning in data. I see daily inventory charts. I see all these things out there, and they have no context or meaning. If you've ever run a production operation, ever seen the supply chain, or ever, been inside of one of these companies, I'm just telling you, it's dangerous. The data out there is dangerous. Now, it could correlate for some short period of time, and it could be meaningful. But I would just say in the community, we're drowning in a lot of data, and it'd be really helpful, as we interpret results. GM's results weren't all bad. I saw a lot of the Twitter community was like, Tesla Twitter's like, hey, these results are, they're not great. They're shutting down the Bolt, but it was kind of mixed. But I think we're just drowning in data. And I do think we kind of need to step back and kind of like sort out what's real and what isn't. But Turbot, I'll turn it back to you.
Okay, thanks, Jeff. I wanted to clarify sort of my position, and I know that you weren't intending to do this, Alexandra, but you said a few things that I just wanted to make sure, it's not taken for granted, okay? So number one, I think many of us are not we're not invested in Tesla because of the mission. And we're thinking, oh, I don't care what happens to my money. I'm just here to support the mission. That is not the case. This is an investment. This is my money. This is important for me that it goes up. It so happens that it's a mission-driven company. So for me, that is a nice to have. At the end of the day, I look at investment. Okay. Number two, I look at the company and the product. I don't look at the quarterly stock movement. And so if I look at the company and the product, there's two major metrics I'm following, right? The transition to EV revolution, step one. Next two would be the transition to sustainable energy, to energy storage. Step three would be bots, right? Step four would be robo-taxi and all those wonderful possible things that can happen. But let's just stick with auto for now. The transition to EV revolution, is that happening? Is it still happening? It happens to be a macro recession, so it's going to be depressed. But is this going to be what's going to happen for the next year, 2 years, 5 years, 10 years? Yes. Then I look at the company and the product, and Tesla is absolutely killing it. They are an execution machine. Okay, maybe not an earnings machine this year, but an execution machine. Left, right, and center. Factories going up, factories winning. Okay, so now you ask me, I just buy everything that Elon said. Not true. I think I've communicated many times here that I don't consider myself an Elon acolyte. There's a lot of things about what he says that I don't agree with. There's things that happen in the earnings call that I don't agree with. Having said that, there's a lot of things you guys have said and other people have said that I don't agree with. Like, Elon or Christian will say that, I've lost confidence in the management. Well, we can dive deep on whether or not you should or should not have lost confidence in the management. At the end of the day, I step back and I think, are they building the factories, are building the product that's going to not only win the market, but win big, like beat the entire friggin' competition out of the field. That is all happening like crazy. I do not want my executives of my company that I'm investing in to be incented by quarterly stock movement. You had a quote there one time, Christian. You said that that you've lost confidence in management because they have not taken care of the shareholders. Well, then I ask you the question: is it shareholders for short term or shareholders for next year and forever? That's what I care about. I want to incent the management to worry about the performance of a company each year and onward. In a macro year, this company has killed it. We can talk a little bit. I have lots of thoughts about volume versus margin.
We'll go longer today.
Yeah.
Well, let me respond to that because you just asked me. Can I just quickly respond?
You will get a chance. I'll give you the chance to respond. So I just want to be clear that I'm not saying that everything management says I buy into. It's like the funny thing is when somebody says to you, "Oh, don't you realize that the world's about to crash? There's going to be this company's about to fall, all that kind of stuff." When you say things that are fear driven.
No one said that. Wow, I didn't say anything. I didn't say
not you. I didn't say you. But people say things like that. It's like, you sound so smart. And for somebody like me who's like optimistic, the word that they'll use is, you're being very naive. I'm not being naive. The world is crazy. Did you predict that a war was going to come? Not you, Christian. Did you predict that macro was going to come? No. But no one can predict one way or the other either. It's going to happen. So, and just to be clear, what I'm doing with my investment here, I pick great companies that have great potential for great margins and great growth, and they're doing incredible execution that's going to win an entire market, right? Now, I cannot predict. And you can say that you can predict what's going to happen in the next 3 to 6 months. I can't do that. Maybe you say you can. And so I'm not going to bother. Now, I don't also have a problem, by the way, with trimming. I don't have an issue with trimming and selling, buying and selling here and there. So when somebody says, "Oh, you're being naive, can't you see?" I give you then the next probably 90%, if I had to guess, in the next 6 months, stock's going to fall. Tesla stock will fall in the next 6 months. That's my guess, 90% chance. And that, yes, I can clearly see that there's going to be margin compression. All of that is very clear at this point. But I might trim to play. But in the bulk of my investment, I'm not going to move it out. I'm not going to move. And by the way, everybody, I'm not saying my strategy is better than your strategy. Every one of us is different, and you're smarter than I am in some cases. But I think I kind of just my own perspective of what I want to do, I feel very comfortable. There's a lot of data to prove that time in the market is better than timing the market. And I know you DM'd me, or you were DMing us saying that's a pithy statement. Yeah, you said it's a pithy statement. But the other pithy statement is buy low and sell high. That's pithy
not a pithy
as well.
Statement. Not a pithy.
It's a
yeah.
It's
I actually gave you the statement. I'll define the statement what I said when you're done.
Yes, you will. But I mean, my point being that when I say something like, time in the market is better than timing the market. And but at the end of the day, who are the greatest investors in the entire history of the world? It'll be Warren Buffett. It'll be Peter Lynch. It will be anybody you mention. Books have been written on this that, you pick several handful of stocks that have incredible, management, incredible product, incredible market. I've talked about this a lot of time. The most important thing is the market. If the market is changing, it almost like you can pick the worst management, the worst product, but if the market is growing along, they'll still succeed, right? Companies will still float the boat up. You'll have a better chance of succeeding with your investment. So anyways, I'm just saying that I just want to be super clear that I'm not being blind about what I'm doing. And we could talk a lot about confidence in management. I do want to address that. And I do want to talk about strategy, volume versus pricing, and why Tesla did what they're doing, that I'd rather have them today have lower margins and higher volumes than the opposite. If they had decided last year, when Elon had already foreseen that a recession was coming, they could have easily said, "Hey, I just launched my gig at Berlin and I launched my gig at Texas, but you know what? Recession's coming. I'm going to slow down my production." They could have made that decision. But if they did, by the way, what would have happened to the stock? It would have just crashed anyways, because they're no longer growing at 50%, not even 30%. And so I'd rather have growing at 30 to 50% with lower margins, but think about what it's doing to the competitors, to the mindset of the consumer. For me, I stopped and thought about it immediately after it happened. I'm like, this is great. This is exactly what I would have done if I was executive of this company. I want to invest in a company that's thinking what's going to happen next year, a year from now, not, I'm going to crash the stock in 3 months because my margins are lower. This is kind of like my position. And yeah, we got so much to talk about, but I just want to be clear. I'm not being naive, and I'm not just being mission driven. This is a fantastic stock. It might fall in the next 6 months, but doesn't mean I'm no longer in any way thinking that this company is not going to make me a ton of money a year, 2 years, 3 years from now. And we can talk about why I think that.
Yep. And you may be right. So let me just try to do some quick responses, because we want everybody to. So a couple things, like the mission versus investing, 100%. Herbert, what you said, I love it, and that's great for you. And I think that's wonderful, and that's a great point of view. But mission versus investing, they're completely separate to me. A mission is something you're on. Investing to me is return on capital. I separate them too. There's a lot of things that I have that I believe in the mission that I do not invest in at all. I give $0 to it. Like Jeff, we were talking, I have no financial benefit, but I could love the mission. And I think Alexandra alluded to that. Second thing, I'll try to go quick. Time in the market versus timing the market. That's a very tricky thing. I'll try to explain what I meant. Time in the market usually is a vernacular where somebody is dollar cost averaging in an index fund over decades. So you're not playing, I'm in, I'm out, the market might go down. You're just building that snowball over and over, and you're buying the Qs or the SPY 500 companies, and you're going to get about 8 to 10% a year over the next 3 decades, and you become a millionaire. That's what they mean. Individual stocks is different. I've looked at stocks, how they move. Great companies turn into no companies. If you try that strategy with some of the greatest companies in the world, they don't exist anymore. So if you just think you can do that with one stock, I know the community does. I'm just saying that doesn't really work, time in the market versus timing in the market, because you might have a stock that is flat for 7 or 8 years, and you might be missing so much opportunity cost. You might be right, and that company does something, a 3x, a 5x, 10x, but it's not guaranteed like an overall market strategy like the S&P 500. So that's what I meant by that comment. It doesn't really work for an individual stock, in my personal opinion. It's just my opinion. Third, the 6 months, 3 to 6 months. I enjoy talking about macro, and I throw it out there. If I'm wrong, which I absolutely might be, I change. If my thesis isn't playing out, macro improves, I can go into the market and start buying. Do I miss maybe the first 10% of the move, 5, 10, 15%? I'm okay with that because I'm trying to protect the 50% downside if there is a major recession. So I'll give up 10, 15% on the S&P to save 50% on the bottom. Now, you may say, well, okay, why am I doing that? It's because I'm at a more of an advanced stage where I'm not building the snowball anymore. When you have a certain amount of capital, you don't want to, at an advanced stage, say 50 or 60, you don't want to take 50% drawdowns on money that you need to maybe live for the next 30 years. So you have to take it a little bit different. So again, that's just what I'm talking about. Anybody in the audience, if you resonate with that, that's great. And then I'll just end it on this, on the management part. This was not a snap decision. I want to make this clear. I've been talking about this and you've been listening to it, everybody, for the last few months. I have been not pleased with the way management is guided all the way from Q2 of 22 with Elon after the Shanghai saying we're going to grow 50 to 60%, and they grew 40%. I wasn't happy with Zach saying we're going to grow near 50% on the call, guiding for Q4, and then land at 40. I mean, a major gap. And then it happened again with the 20% gross margins. Again, you could say what you want. They don't know. Things happen. I get it. And then we come under that number after he said we should be comfortably over it, or whatever the vernacular. I don't have the exact transcript. So this has been building up for months and months and months and months. And for me, the conference call at the end was the tipper. I did not like the margins. I understand you love the strategy. I do not. I believe that the product that Tesla gives, with some education or a little bit of more, I see it all over Tesla Twitter. But the thing is, my head's going to explode because everybody that already knows this stuff is on Tesla Twitter. So all these Tesla Twitter tweeting out all this great thing about Tesla is going nowhere. The people that need to hear about all these great things about Tesla are getting none of it. So it's great that we do all these tweets and look at me and look at this and this is great. No one knows. We already know it. So again, that's where I stand. I think Tesla could do more to support the shareholder. Yes. Do I care? Do I want them to manage a business from quarter to quarter? No. But do I want them, when they give guidance, do I want them to meet your guidance or get more conservative? I want to know when you say something, it's going to happen. Maybe not 100% of the time, but maybe 90% or 80 or 70. It seems like now we get a big statement on a quarterly call and it never happens. The last 3 or 4 big things that they promise, it's been for me, it hasn't happened. So I personally have not liked that, and I've lost some trust. So that's just hitting them all there. Go ahead.
And I hear you, Christian, because one thing I've been waiting for the whole 9 or 12 months since this has been going on, these overhyped earnings calls in 2022, and now the probably sandbagging one of Q1, is that they never revise their guidance. Everybody else in stock market is, making sure that shareholders are informed when things change. So I have a couple of leaps, but before I want to say that, first, Herbert, I didn't mean to, put you as the mission-driven maybe I'm not allowed to be on the big screen anymore because Herbert is upset with me.
Oh, I'm sorry. I was looking for a transcript. I'm so sorry. I'm looking for the transcript. Sorry.
You're back.
I still love you, Herbert. Don't you worry. And I'm sorry if you think I meant that in any way
No.
negatively as being mission driven. I actually have a lot of admiration for people who are mission driven because I think their life must be easier than mine. I mean, I'm spending a third of my nights thinking about Tesla in all senses, and it's actually, I mean, it doesn't bring me anything other than a headache. So let me address a couple of your points, Herbert. First, Warren Buffett. I mean, I've studied him for 30 years, right? He was obviously the guru when I started off. Warren Buffett is still not in Tesla. Okay. If he would be, and I know exactly why he's not therein, but if he would be convinced in today's management, if he would be convinced by Elon, he would be in it, and he's not. So while I love your comparison of who is a good investor and who is not, let's also face that he's not in there. The second thing that really is a point that Jeff and me are going on and on and on about it behind the scenes is whose macro is right. I mean, I hear Elon now say sorry, I'm starting speaking French because I get also so passionate about it. Since December, he's telling us that there's this recession and that he doesn't know how long it will last. Last we heard in April, it's going to be until next year spring. But he seems to be the only one. Look at all the other earnings out there. I mean, they're not all fantastic, but they're actually usually a beat in all types of sectors, of industry sectors. So he seems to be the one seeing a very particular macroeconomic situation. Now, if he is the only one, we might want to ask ourselves, is this only the macroeconomic market that is in distress for EVs? Or even go further, is this macroeconomic market in distress only a problem for Tesla? But these are questions that are just not asked in our Twitter sphere, right? Since we're all in the same boat. And so that makes me uncomfortable. It just, why should we not ask that? Why? So is it because we have now our core car buyer scene is filled, right? We all have our Teslas, and to get out of it, we have to change of strategy, and we have to change of dialogue, and we have to find other means. But I mean, God beware, you say advertising or you say anything marketing wise, it's obviously too much as well. So that really worries me. Whose macro is the right one? And if Elon is right, is that really just an EV bubble macro problem, or is that really a wider one, like he thinks it is? And then the other thing is, I'm quite surprised about the time lag between cost of goods sold going down and being reflected in the financials, right? Because in the first quarter, it was nearly nothing. Now the question is, will it trigger through for the second quarter, which will be a full quarter with the price decreases and probably even more to come? Or is it still lagged because they had old contracts at higher prices? I mean, this is all explainable, but the funny thing is we have so much data on so much else, but on this particular point, we do not. On the take rate for FSD, we do not. So a couple of key numbers that would really help, rather than having all this other stuff out there, are not available. Then the last point I wanted to make, and that's why I went into my drawers, this is my last BlackBerry, right? My last BlackBerry died, thank heaven. So now I'm on Samsung and Android, and everybody else feels that I'm belonging to this world again. But I have been a BlackBerry girl since 2003. And I remember very well a tweet that Jeff sent me this morning. 2006-07, the Apple phones came out, but I was my BlackBerry girl. And in 2008, BlackBerry grew by 100%. The stock price, the sales of phones, everything was wonderful. At that moment, I could have bought BlackBerry. I was, not as fanatic as I'm today about Tesla, but I was all in on the product, and I could have been all in on the stock. I was not in the stock market at that moment. As you all know, I'd left finance and I just went into cash for everything. But why do I tell that story? Disruption happens suddenly. One of my main reasons to stay in Tesla is, yes, I do believe, of course, a bit in the mission, but I also know the day it goes up, it can go up in a week 50%, because when it happens, it happens, when the confirmation comes. So the fear of missing out on that moment is actually keeping me invested. I couldn't go like Christian all out and just hope that I'm smart enough to find the moment when I go back in. I really do believe the stock market will at one moment remunerate Tesla's efforts, which will just suddenly appear. So the same way Apple suddenly picked up, and the same way BlackBerry suddenly died, the OEMs will die and Tesla will pick up. So it's just a matter of time and being patient for it. But that doesn't mean, and I won't, and I haven't been, I won't shut up of seeing the short-term pains, because I do believe this is all our company. Well, not yours anymore, Christian. You shut up. But everybody else who had some
shares. You said I could still talk about it. You said I could. You defended me.
Come on.
You better make sure people
That was like 2
now I have to
hours
be
ago.
after you. Exactly. What's 2 hours ago? I learned that from somebody. Anyway, so the thing is, we're all shareholders in here. And so this is our company. And I don't want anybody on Twitter tell me, you shut up, you don't know. Do you think management doesn't know whatever? Maybe they know, maybe they read, maybe they don't. But us as shareholders, we should be allowed to express our concerns, our proposals, our whatever. And if they like it, fine. And if they don't like it, what the heck? What do we have to lose?
Love it.
Love you
Yeah,
too.
Herbert, did you want to get into the earnings call, or do you want to keep going on this?
I think there's a lot more to still cover this, right? I mean, so again, if you want to talk about earnings call, let's do it. But it just seems like it's another short-term view if you want to talk about the earnings call.
Yeah. Well, we can talk about the earnings call, but quarters. Go ahead, Jeff. Real quick. Quarters turn into years. Quarter after quarter turns into year. Like eventually, short term turns into long term. Eventually, short term has to matter. That also drives me bananas. I'm sitting here till 2040. No one's sitting here to 2040 waiting for the stock to go to $1, and then it's going to rebound 50x. Look, short term matters because here's why. If you buy a stock at 200, I'm just saying, you have to be insane to want it to go to 100 before it goes to 300. Like, you want to get in at a valuation that makes sense where the business is executing. Nobody wants to draw down 50, 60, 70, 80%. Well, some people do, but I don't get it why. And then go up triple and make a little return. You want to try to build in an area that's good. So I'll shut up, but I just had to say that. Like, this whole thing of let it go down to 60 so I could buy more when you already have a huge position. My mind wants to explode because that makes no sense. Your capital's already in. Why would you want the capital to draw down to be able to buy something and you barely have any money to put in at this new lower level? So go ahead, Jeff.
Yeah, no, I agree with that. I just want to get into the timing element of what could be happening in the market. So Tesla lowered their pricing, and they've done it in a couple of different stages. And this is debatable. I've been on Twitter. I've debated this. I don't know who knows that Tesla lowered their pricing. I think if you shop for an EV, you may know that Tesla lowered their prices. But if you're someone you're trying to be like a switcher, like I'm on ICE and I've never looked at an EV before, you may not ever know that Tesla lowered their prices. Sure, it's on CNBC, but a couple 100,000 people watch that network per hour. So it's a very small number of people. The Tesla Twitterverse is very small. But again, I just wanted to get a little bit into the timing. For me, I would want to see a full quarter of Tesla being at price parity with ICE. We haven't seen this before. There's always been a $7,000 to $10,000 to $12,000 disparity, which is 20% or more of an ICE to EV. And I know when the comps on performance and so forth, Tesla blows it away, but I think people are kind of looking at how many, how big is the car, what is the seat, and so forth. And forever, ICE or EVs have been 15 to 20% higher. And now, put the IRA aside, they're essentially, they're pretty close right now, if not right on top of each other for certain models. So I think that's going to be an interesting thing. And it's not going to play out in one day. It's not going to play out in 1 month. It's probably going to take a couple of quarters to see this, but it's going to be interesting. And there's a reason. I don't think Tesla is just insane with like installing capacity and just hoping the demand comes and we'll just crush the MSRPs down for that. I don't believe that that's the case. I believe over time, that demand will come in, and I believe over time they're going to be able to actually lower their prices in terms of their COGS structure. That will happen. But I think the timing thing is very strange. There's only been a couple of weeks in Q1 with the order flow at the new pricing and them producing at the new pricing. And I just think there's this little bit of an overhang, and these things, like, they don't happen on a knife edge overnight. So it'd just be something interesting to discuss. I just don't think we've seen the full extent of what is the order flow, what is the order rate with the new pricing. And then, by the way, the IRA is totally unoptimized for consumers right now. You basically drive away from a Tesla delivery center paying the full price for the car, and you don't see that money for 12 months. So you haven't taken down to me, for people that are qualifying for the IRA, I think they're going to be sensitive about the monthly outlay for the car. So I actually think in 8 months is not a long time from here. They may have to actually be raising prices.
Yeah, and I agree with you,
when that
Jeff,
goes to point of sale.
Yeah, I think that point of sale is a great comment. But look, you know a lot more than me on this, but I do think from enough evidence, and we've talked about this, with the build up in inventory a little bit, I understand what you're saying. With the production in Q4 matching Q1, and now looks like Q2, I'm looking at the boats. It doesn't, this is just me thinking and looking. I'm not saying I track this, but we do have people that do track it, and the numbers aren't that great on growth. So there is something, seems like it's happening. Because prices have come down tremendously, and the growth is really starting to draw down. They are still growing, but it's much less than where it was at much higher prices. And when it goes to your GM point, they didn't reduce prices. Inventory's not exploding, and MSRPs are still hanging in there. So I can't explain it either. It looks like something with Tesla, specifically Tesla. The growth is slowing with the decreasing prices and with the headwind of the tailwind of the IRA. I understand it's not point of sale yet, but it's still a $7,500 on your tax deduction. It's been talked about, now for a while. So something's a little off for me there. It seems like there is either a demand pocket, some type of somewhere in the country. I don't know. Something's happening that it's not. The growth has just seemed not to be there where it was, what I'm used to. And then I'll just finish it on this, and this is just speculation. China, there's a report that Shanghai might go to Canada. That's fine. Maybe this is another great move, but that makes no sense to me. You have a domestic market in China, and you still have Europe, where there's still enough demand probably to go from Shanghai to Europe. Berlin is not maxed out yet, and they're still ramping. Why would you send it all the way there to Canada when Fremont, you could just go right up there to Vancouver, or even from Texas to Canada? Why would you want to do that? So again, that makes me think, okay, is there not enough demand in China for these cars? Is Europe slowing that now they got to take those cars because they don't want to shut down Shanghai or knock the production down there? So, hey, we got to find a place to move these cars. Let's send them to Canada. It seems to me that's a little bit of a red flag. Now, I may be completely wrong, so I'd love to get your take, or whoever else has a take.
I don't know what Tesla's announced. I don't know if that was just
it was speculation.
Rumor.
But I'm saying if that was speculation, turned out to be true, would that be a good sign or a bad sign in your opinion?
Yeah. All those are potentially valid points, Christian. But let me give you some counterbalance points just to consider. So the number one selling car is Model Y across the board. Created a record just this month for all of Europe, number one selling car. The number one selling car in China, as I pointed out many times, I love this chart, from January to March of this year, is the Model Y at $50,000 plus US dollars over all other makes, all other segments, EVs versus ICE cars. So clearly there is they're producing many cars because they've invested in multiple factories. And as Jeff has pointed out, they're at 50% capacity. It's better for them to keep making this go up to 80%. The scale, the cost of goods, all that will go down the more cars they produce per factory. So now you're producing more cars, than the demand that is softening because of continued increased interest rates hikes and the macro. So yes, I'm not concerned that, oh my gosh, it sounds like that the sales are faltering. Yes, volume should go down in terms of deliveries. That's why they're doing price cuts to match that's happening in the macro. You're going to get hit hard this year, but does that mean that the overall demand for EVs is over now, that the story has changed? Everybody wants to buy ICE cars. Everybody wants to buy some other competitor's cars instead of Tesla? No. And don't tell me, oh, there's something weird about Tesla, but everybody else seems to be doing well. You're comparing, as Jeff has mentioned a few times, there's been kind of this inventory of gas cars because of COVID that they're actually just getting rid of. And so you see a blip in the GM volumes and prices, and you're going, why are the GM numbers and all that going up for gas cars, right? But there's no doubt, unless you can prove to me some other competitor has a better EV, better price, that is now growing higher than Tesla is. And somehow, so at this point, the volume is, if you may be right, volume might go down. That's why they need to price cuts. And by the way, just to point this out again, I don't know how many times we talked about this, but the prices that the Tesla cars are today, the Model 3 and the Model Y, are now the same price that they first sold it at pre-COVID. Okay. And they have a better margin. So while people are going, oh, it's amazing how much price cuts that Tesla has been doing, 6 price cuts since whatever, that is from this elevated high of price rises because of the COVID scenario, supply chain issues, inflation caused all things to go up. And then now they're able to bring it down. And why are we complaining? If there was no COVID and there was no macro issues right now, we'd probably be at the same price we are now. That's what they started with, if not even cheaper. So I don't have an issue with this. You were just, people are like spoiled with a 30% gross margin for an auto manufacturer. Now we're at 18%. Oh my gosh, how terrible. The company's going to die now. No, it's not. It's succeeding like crazy in an incredible market. It is doing very, very well.
Nobody says it's dying.
And one last point. You mentioned about Warren Buffett. Warren Buffett invested in Apple in 2016. 2016.
Yeah, I know.
Okay?
Yeah, but Warren Buffett sells stocks all the time.
I invested in Apple,
He sells
as you guys
all the
know,
time.
decades ago. I invested in Amazon and I invested in Tesla, a decade ago, right? So these are examples of companies that I did very, very well on versus buying in, buying out, selling here, buying here. I just buy when I get more money. And these are probably, if you're looking back, the best possible growth, possible investment anybody could possibly made. Maybe I got lucky because, it's not like I'm suggesting anybody should concentrate on 1 or 2 stocks. I have a basket of stocks, but I try to pick industry market leading that's going to riding a wave of a revolution that I believe will succeed. If I resisted buying Amazon very early because their PE was at 70 plus, and I think that's ridiculous. But now it's ridiculous that you didn't buy at that point. And the reason why, it's because it's industry disrupting. And so if they win that industry, and there's so many signs that they're gonna, right? Amazon.toast, and everybody already believed that they were like no margins. They had no margins, buddy. Losing money because they kept investing it back into the business. And so now last week we heard Tesla say, I'm going to increase my capital expenditure. You bet there's going to be an additional operation expenditure showing up next year. So if you're concerned about margins in your price stock, don't buy today because next year will be compressed. Having said that, oh, by the way, Tesla Energy is going to come up by the end of this year. And by 2025, the margins from energy is going to be equivalent to the margins we have today. So 2 years from now, don't tell me that the PEs of an auto manufacturer, we are no longer an auto manufacturer within 2025, and the PE will be re-rated. And so I'm very comfortable hanging in there right now. But you want to buy and sell portions of my, you can definitely do that. But anyways, I just get some of that out.
I love the passion, Herbert, and I want to go to Alexander or Xander, but I love the passion. I'm not saying anything. I'm just telling you what I'm doing. I see margins going down. I think the stock's going to go down. I'm going to get a better thing. I'm not here to defend the decision or promote it. I'm just telling you how I'm thinking, and I'm playing a little bit of a game. Yeah, I might lose that game. Tesla might triple, and I might miss it tomorrow when it triples. So if it does that, I'll be happy for you guys. And like I said, I might scale into it in the next week. I might buy a huge portion. What I'm saying is, at this moment, I don't like what's going on. And you could say what you're saying. I love the passion, and you may be right long term. But to me, the story is still a difficult story in the next 3 to 6 months. So again, the stock could do whatever it wants. Sometimes it doesn't go on fundamentals. It might rocket it on bad news. Like you never know. All I'm saying is that it seems to me something is happening with Tesla that I can't quite put my finger on. But there seems to, and it's not just me. There's people like Emmett Peppers in the community that is pushing for education hard. He's thinking the stock might go down. So it's not just me. And like I said, I haven't just come to this opinion yesterday. This has been building for a few months. There's something happening that I can't quite get my hand on. And I don't like when Elon's on the conference call talking about crystal balls. Like crystal ball, he said it like 5 times. I could see if he doesn't know. Maybe Mac, but no, for me.
Say he doesn't know. That's why he said,
he did.
I don't
he said,
have
I don't
crystal
have a crystal ball. That means he doesn't know.
But Christian,
yeah,
how would you buy
can
it tomorrow? How would you buy the stock tomorrow? You said you may buy it tomorrow. What would, I mean, all these things that have happened, they seem like
I'm being a little
ingrained.
facetious. When I mean tomorrow, I mean in the near term, like next week, a month from now, 3 days. It could be tomorrow, though. Yeah.
I mean, I mean, if you lose
what I'm
trust
saying,
in management,
I could buy it. I'm saying I could buy it. I didn't say I will buy it. So what I'm saying to Herbert is, and to Alexandra and everybody saying, how could you leave the stock? I could be back in the stock tomorrow. What I'm saying, it doesn't matter.
Yep.
So I'm trying to make the point that I
way.
could be in and I can be out within like a day, a week. I think I've said this numerous times. I've been out of Tesla.
I don't have an issue.
Yeah.
Christian, I don't have an issue with what you're doing, by the way. I'm defending
and no one out there
people
follow this advice. This is me doing crazy things that I want to do. And I'm comfortable with it. And I know from my track record, I benchmark myself against the S&P 500. If year after year after year, I destroy the S&P 500, and everybody, every trader, even well-known traders, some have unconventional styles. I go a lot from the gut. A lot of my style is from the gut. It's not a lot of technical analysis. If I feel something and I'm up on a position and I don't want to hold it, I sell it. But if something changes, the macro might improve in a day. Maybe the Fed does something and that helps Tesla. So it might not be something, to your point, Jeff, Tesla specific, but macro is going to lift Tesla. And I want to be in there a little bit on Tesla too, as the macro takes it up. So that's what I mean. Not that I'm studying Tesla and yesterday and today something's changed. No. I mean, from a purely macro driven momentum trade, that type of thing.
Okay. Yeah. You are perfectly good doing what you decide to do. I'm not in any way saying that you shouldn't do what you're doing and that you're wrong. I am defending when certain statements are made as you tell your story of your decision that I think that's not right. That's not
okay.
Right,
so let's go to Jeff. Let's go to Alexandra. Let's go to Xander. What did they think about the conference call? Let them give an honest opinion.
Okay, let me first address it, and then I'll let everybody else come to that. When you say things like I can't trust, I lost confidence in management. They're talking about the crystal ball, all that stuff. Okay, here's my perspective of how I saw all that. Right. So when they give by the way, you need to correct the way you say things in terms of when you say the 50% growth. Everybody knows that they're talking about average growth over the following 8-10 years of about that point of 50%.
Not what they said.
That's
though.
True.
Zach was talking about 2022. You can't make up stuff, Herbert. You got to tell the truth.
You can't. When he says that, it's like he's talking about the average. You can't predict one way. The other two is they often say barring macro. Your favorite statements, barring macro. You're pushing me to the wall. I think maybe something like this. Okay. Number 3, when it's like funny, when they say a guidance, they don't hit the guidance, you go hard on them. And then when they don't give a guidance, because we can't predict what's going to happen this year, we can't go with macro. I do not have a crystal ball. You go hard on them on that. So it's like, listen, this is a very tough thing for any executive to be able to predict what's happening from a 20% to 18%. My gosh, I can no longer trust this guide. First of all, be clear when you say, I don't have confidence in management. Maybe you're saying you don't have confidence in their forecast, but they couch the forecast with barring macro. Can they control the interest rate hike? Can they control inflation and what's happening with that? They have some visibility, but they can't tell you exactly what's going to happen. So at the end of the day, I just look at execution. Sorry, guys, go ahead. I want to let others speak. Go ahead.
Yeah, I think I think in Q3 and Q4, there was a miss on volumes and revenue. I mean, there was a miss to analyst expectations, right? These are quarterly expectations, and I actually think that they've started to kind of be a little bit more conservative on their more recent statements, just based on having a couple of quarters in a row of like, hey, we were like 20 or 30,000, I believe, low in Q3 on units, again to expectations, and then in Q4 slightly lowered again to analyst expectations. I think Q1, there were multiple expectations. We talked about the three different analysts, different fact sets and things like that. But I've studied the Q1 transcript though, and I think we do need some clarity on that. On the Q4 one, I haven't studied the transcript. And by the way, at a minimum, they generate confusion on their earnings call, and they allow the earnings call to be interpreted multiple different ways. And that happens when you're talking to 25, 30,000, 100,000 different people. That's going to happen. But as one of the things if I were to be slightly critical, I'd be like, that's something they need to clamp down on their communications. So it's just super clear. But on the gross margin piece of it, a couple of things. I have two comments on this. One is, Zach couched it as like, my forecast is 20% and things could change throughout the quarter. But my forecast is 20% gross margin, ex leasing, and $47,000 in ASP. And I view that as a forecast from the CFO. I didn't view that as like I'm committing on behalf of the company that there's a red line in the sand, it's 20%, and if it's lower, I just view that as this is my forecast, and then there could be some variance. So guess what? There's 8.9% variance on a forecast, and if we say that there's all these macro issues happening with interest rates, with bank failure, with all these different things, I mean, how many people were buying a car in week 1 and 2 of March? I don't know. Maybe that seized up some people in their purchases, but to be within 8.9% of your prediction, I don't know if I'm throwing them out the window from a management team perspective on that. And then on Elon's statement of, technically, he used the word technically, we could take margins, to zero. He used the word technically, and we could. Now, being critical, I don't think that's the call to be having that conversation with and talking about doing that. I maybe during the Investor Day conversation, I don't know, but it certainly confused investors. It certainly confused analysts, and they certainly, if you are bared up as an analyst or you're bared up as an investor, you hang on the bad portion of that comment. If you're bulled up, you're saying, all right, Tesla has pricing power. They're saying this is something they could technically do in the future. There wasn't a commitment on time frame. Elon knows FSD is not ready right now to be full robo-taxi and to be able to garner those margins from each auto sale. So if you interpret the call, I believe in the correct manner. I believe I don't know if management, is necessarily, missing all their commitments and then guiding the business to zero again. But if you're kind of bared up, or you're a little bit negative, or you're just concerned as an investor, I can see how you take both of those comments and you say, this is not for me.
Sandy, you want to say something? I don't want to jump in before you've done.
I have so many reaction statements that I want to make throughout, but I don't want to cut you guys off. Overarching, I think something I wanted to say was that Herbert, you were going through the numbers, and it actually lends to what Christian is doing, is that on the short term, during the next couple of months, there's just too many bearish things for his risk tolerance. And so he's getting out. And another point is that it's in a tax-free account. So he can do that.
Yeah, that's a good thing to say. I have no consequences.
Yeah, and there's no consequences. So, and Alexandra said that, she has FOMO. And that's the main reason why many of us entered the company, because they could come out with something or solve something that you just don't know about, and I think that's a main point. And so for Christian, he's willing to take the risk of being out of it short term, and and he can. My portfolio is a taxable account. I have a little bit in my Roth, and that's where I think about, like, oh wow, I totally could be making those moves, but I just don't, because overall it's just there's people that can commit a lot of time to this, right? If you're retired and all you're doing is looking at all the data that Jeff mentioned that's available, and you're able to make those short-term moves. But there's a lot of people that are invested in Tesla that are kind of hands-off, and it was a long-term decision. Like for us as a family, we made a long-term decision that overall, I know that it's the right one. Short-term, ouch, right? So I had a whole bunch of other reaction things, but I want to hear Alexander.
Love your cat. First time I saw your cat. So cute. So I have a couple of things we said before, but I want to point out here again. It's been 9 months that every earnings call I scream and say, please, Elon, stay away. Honestly, for the shareholder, it would be much better. It would be boring. It would be to the point. It may be less bombastic. And of course, we love hearing from him. But I mean, go on his Twitter. You'll hear from him every day on any subject that you wanted or didn't want to hear about. But I really believe these earnings calls have to become less hyperbolic and more to the point, and more addressing the audience, which are financial analysts. We may not like it, but that's what it is. And obviously stockholders. The second is, I said it earlier today, but I want to say it again. If you give a guidance, and they gave guidance, Herbert, I mean, I know you don't want to point them down to it, but they give guidance. And then the result is that the guidance wasn't respected. You need to do a revision of that guidance long before the earnings call, still during the trimester or during the quarter. So when people tell me, don't do any proposals on advertising, they have data, they know so much more than us. Well, if they do know so much more than us, please revise your guidance, because you must know about it and then keep us updated. That is your job, and that's what us shareholders want. The other thing that while we talk earnings call, I remember very well. The only thing is I don't remember whether it was Q3 or Q4, or it may have been at the shareholder meeting last year. Dojo came up, and Elon was very non-committal. Yeah, maybe it will see the day. If it sees the day, it's great, but this is still up there, right? So in my priority list of things to look, you remember, Jeff, right? I mean, I really have it in my ear. Now, this earnings call, a couple of days ago, Dojo is the hundreds of billion-dollar bringer, right? So just sometimes I have this feeling we have these stars up there, and there's the FSD star that comes every year, and now there's the Dojo star, and there's this star, and there's that star, and you do tire your shareholders that believe in that and that hope that this all comes to fruition. Now, having said all that, the Model 3 Highland is coming, the CyberTruck is coming, the mega packs are scaling. There is a lot to look forward, even in this calendar year. It's not as if everything is bad, but they have to do a better job in explaining guidance. For example, another one I really got annoyed about was the first one was, we don't address the FSD take rate. When a phrase before that, FSD was the lifetime money bringer, right? And the analyst, for once, I mean, usually I don't like these analysts, but the analyst was actually very good in straight away picking that up and saying, okay, so if FSD is what's your current FSD rate? And Elon said, we're not gonna address this today. How can you do that? If that was the joker that's gonna explain why you can potentially go to zero margin selling the hardware, don't get that. So the one that bothers me the most is it's not big, so let's not overdo it, but is the foreign exchange. So the foreign exchange, yes, from Q1 2022 to Q1 23 had a negative effect. But foreign exchange has never been looked at on a yearly basis. Foreign exchange is something you look at on a quarterly basis, and from Q4 to Q1, it's actually a tailwind. It actually absorbed some of the other losses. And when you look exactly, the free cash flow would have been negative without the rec credits. There are so many other things where you're going like, okay, so the foreign exchange helped. So what is missing? And I still don't have the answer. So I just, again, I'm in the stock. I have FOMO of not being in it when it happens. It will happen. I'm very, very positive on the medium and long term. I think it will be a choppy year. I try to be smart when getting back in, but I'm actually not smarter than anybody else here. So I don't want to overdo it, but I also want to, advance the eyes wide open and the ears wide open, understanding what's happening. And when I don't have an answer, I get annoyed because this is also our company and we're shareholders and we're asking legitimate questions and we get exhausted asking them. And the biggest of my questions is and always will be, are we addressing the new customer? The customer that's not on Twitter, the customer that needs to be educated on EV, the customer that may consider EV, does he even know that there were price cuts? Does he even know what's on the market at the moment? So I'm done. Thank you.
No, that was good, Alexandra. I loved everything. And I'll just say another thing that frustrated me. You just hit something with the dojo. Elon on the same call said it could be a zero. So not only your 100, he said it might be nothing. So go ahead. You can take what that you want with it. Go ahead.
Okay, I'm just trying to review the transcript about the FSD take rate, and that you said, Alexandra, that he said we're not going to address it at this call. I don't find that. Maybe I'm wrong, but I did not see that. This is Pierre Ferragu asking about the FSD.
No, it wasn't Pierre. No, it wasn't Pierre. It was before Pierre. It was
because he asked for it. Pierre Ferragu asked for it as well, and they answered
maybe
a long answer.
The second or the third of the analysts. And his immediate answer, the first phrase from Elon was, "We're not going to address FSD in this call."
All right.
I'm sorry, I got so wrapped up. My gosh, all these emotions with Tesla always.
No, you were great, Alexandra. Look, every one of us, including Herbert, who's very passionate, you're passionate. Xander is actually the stoic. And Jeff is a master relaxer. He's amazing. But no, this is passionate. Like you guys live, and me too, for the last 4 or 5 years, we've been living and breathing this stock. Herbert, you do a daily show on the stock every day. Alexandra, you're on Twitter. Jeff, we've been on Spaces from before we did the YouTube channel. Xander, we started this. We talked in Clubhouse about Tesla for every day. Like this is like in our blood, right? This is like personal. So yes, it is passionate and it's amazing. So don't apologize for that, Alexandra. You should be passionate. Yeah. Oh. Where do you want to move it, Herbert?
Well, why don't we address what happened to GM today and the Bolt? People are asking about that question.
Sure.
Jeff, you did a good job on that. Go ahead. Yes, please.
When they relaunched the Bolt, so the Bolt had an issue with battery fires. Again, GM likes to call out, their LG batteries. That's fine. Throw your supplier under the bus. You integrated that pack and those pouch cells into your car. It's your car. And that car was offline for, if you remember, for many months. There were signs up on garages saying if you have a GM Bolt, don't park it in the garage and plug it in, or don't even park it in, a parking garage, a public garage. So then they went through, they cleaned that up, they relaunched the pack, they relaunched the car, and then what they did last year was they lowered the pricing. There was all these oohs and ahs, like how could GM do that? Like it's 24 and change. That's before the IRA. This is the greatest thing ever. And I was a bit suspicious because I'm like, this is the company that says they won't be profitable in EV until 25 or 26. And there's an analyst note saying that may be pushed out to 27. So here's the company that says they're not going to be profitable in EV for many years. And now they're relaunching the car at a lower MSRP. So what I believe happened was that car, as soon as they relaunched it, they had what's called end of life, an EOL plan. EOL plan is like, this is the date I'm going to stop producing this. This is the date in my factories. This is the date I want my suppliers to stop. Because what they're trying to do, the thing that will kill the balance sheet even far worse than the COGS today, one of the biggest things in COGS is called E&O, excess and obsolescence, and that would destroy them. So they want to clear all the material out of inventory. They want to clear all the cars out of inventory. So they announce to the marketplace that this, we're gonna stop production at the end of the year, and that allows their dealers to flush inventory, to do sales, to do what have you. I'm sure they're going to allow discounting, but this has been the plan since they relaunched the car. And the reason is the brand was probably tainted. The Bolt brand was probably tainted from the fires, one. And two, they don't have a COGS structure that can live below $30,000 MSRP. And quite frankly, they don't have a COGS structure today that lives at any MSRP level. And that's why you see 968 Cadillac Lyrics produced in Q1. It's a beautiful car if you look at it, but it's $65,000, right, for that car, when the Model Y, the equivalent car, is $49,000 now. So they only produce 968 cars in a quarter that they're 15 months into production on. And this is supposed to be General Motors, the biggest, them and Toyota, the biggest manufacturers in the world. So in terms of the Bolt and GM, I believe that's what was going on. And then just quickly on GM. I studied the North America results. I know China was down about 25% in volume, and I believe there's a couple of videos out there to kind of go break this out a little bit more. But a couple of things I noticed, obviously they did a beat and raise on revenue and EPS, and they guided higher for the remaining of the year. So, on its face, headline, that's bullish. I always try to take a peek at the inventory levels, and their inventory levels in North America are actually flat. The inventory levels that they left Q4 with and the inventory levels they left Q1 with are essentially flat. To me and to us, I don't think they're great. It's 8 weeks of supply. It's 410,000 units, and they're selling through about right around 600K and change in a quarter. But that's the inventory levels that they actually drive for. They drive for somewhere between 50 and 60 days of inventory. And now I know some of the product lines have much more inventory. I don't know if they've broken out inventory by product line yet, but we saw them shut down the Silverado factory in March. There's reasons they're doing this because of inventory control. So a couple other things that I'll kind of turn it over. I know their market share overall. I think one of the reasons two reasons the stock was under pressure. One is their market share is down a couple of points overall. And when you're a big high volume manufacturer, that's a big deal. And the second thing was their operating margins are only 6.4%. So we're like slitting our wrists when Tesla, was at 11 and change.
11.
General Motors is at 6 on operating margin. So there's some not so good things there. And then finally, they confirmed their EV forecast. They said that they're going to produce 50,000 in the first half of this year, which means they're going to do 30K in Q2. And they said that they'll get to 100K in the second half, I believe. So they confirmed that guidance. That's the piece of it I believe the least. I believe that they are going to continue to push out EV because they don't have the margin structure that would allow them to get to those volumes from an architecture perspective. Meaning, if they built 100K or they built 500K, they would be under massive COGS pressure just because of their architecture they chose.
Thanks, Jeff.
I think the one thing we can all agree on, none of us would ever invest in GM, right? Can we agree on that?
Correct.
Agreed.
So you see, Herbert, you see how easy that was?
That's right, because I was asking that question, which is if you guys right now
I love you.
don't invest in Tesla, which is fine. Again, I'm not against this at all.
Should we tell them what we invest in, Jeff?
Yeah.
Should we give a name?
No.
No?
I'm in Google.
I've been told no.
Google beat Google.
Did
By the way, just talking about macro and NASDAQ.
Yeah.
Google
I was wondering
and
about the
Microsoft,
earnings.
significant beats.
Wow. Okay.
Exactly. And Google announced 70 billion of buybacks.
Well, yeah, the market loves that.
I was texting with Gary. You should hear him. He's like, got my buyback.
Yeah. So anyway, that was actually good for tech and good for macro, that those two companies, that are a big portion. They're two of the biggest companies, top 5 in the S&P or in the NASDAQ.
Yeah.
Now you have Apple next week, but these were two of the big ones.
Yeah.
And for them to be, doing
Yeah.
this well now.
So
they
for
gotta get through their
example, though,
earnings call.
Jeff, so to your
we'll see.
point, what I'll do tonight is I will go through those conference calls. I will listen to the Google call. I'm going to listen to the Microsoft call. I'm going to see, the market could have initial reaction, but I'm sure there's some bad stuff in there too that I want to know about and what they're talking about going forward. So you'll get initial reaction, but I'll study that tonight and I'll get a better feel of what are they saying, 6 months out. And yeah, so absolutely though. Yeah, good stuff.
And Herbert, what if Elon is wrong in being so aggressive in fighting this recession that he sees, but that nobody else seems to see, right? Because that is really then a bit concerning for the shareholder, because obviously we're giving it up through these price cuts and through these lower margins. And what if he's wrong? Why being so aggressive does actually not solve the problem? And I think that's a legitimate question.
Yep, that's a good point though. Let's go. I mean, again, correct me if I'm wrong, right? They built 2 factories last year, Giga Texas and Giga Berlin. They had a decision to make. If they see a recession coming, do I reduce my production, or do I go ahead and go full bore, hit as many production as possible, which is what they did. Therefore, in order to hit the demand when there's a recession, they need to reduce prices. So today they went and added more capital expenditure. So it's almost like with or without a recession, as a company, we've made a decision. We're building factories. We're going to build more. We're going to cut margins in exchange for volume, right? He's meant that. And they'll make it up in margins way down in the future. That's fine. So I don't see what the problem is. I think that's fantastic strategy. Reduce the margin this year. Absolutely. Even if he's wrong, let's say there is no recession. Fantastic. If there is a recession, they have to cut prices some more, but they're going to continue to produce as much volume as possible. I believe in that strategy. Do you not?
I do not. Here's why that's not fantastic. Because if the macro is not that bad and everybody else is doing good, and Tesla has to splash price and lose and not even grow at the 50%, and they go from earning 12 billion in 22 to say 8 or 6 or 7 billion, you as a stock owner are the stock's going to go down. And if you're not buying it because you're already all in, then you're letting other investors get this. Something's wrong with Tesla. They shouldn't be slashing prices if everything is kind of okay. So like to Jeff's point, why is GM not slashing prices and inventory is not ballooning? Why is, I don't know, I'm just using them as an example. Why is other companies talking about, I don't know, Google or Microsoft? I'm sure there's a little bit of a slowdown, and is it something Tesla specific? Could it be Elon? Could it be some people not wanting to buy a Tesla? Either they don't know it.
$50,000 car. This is a different, if a $50,000 car that's impacted by interest rates.
You just got done telling me how cheap they are. They're on parity, and we got the 7,500 IRA credit as a tailwind. Why can't they sell Teslas when they're more affordable than any other car?
That just happened now with the price cuts that just happened now. They
so
just hit parity
why did they just cut prices like a week ago? And why have they cut prices in Q1 so aggressively if they knew just a few weeks more everything's going to be great?
I think
it doesn't make sense to me.
Everything's great.
I think I'll go back to the fact this is a timing issue. I believe when you look at what's happening with GM, so they reported Q1, got it. We know what they did in Q1, we got it.
Right.
But if you look at where their pricing was relative to MSRP, see, when you have to piece apart these auto earnings, it's really complex because you have to look at like their average transaction price, what spiffs were in, what percent was above MSRP, and what I'm starting to see, if you start reading some of the Cox automotive reports, you'll see that they're starting to bring their price down closer to MSRP, at the point of sale. That's one thing that's happening. The other thing that's happening is I purely believe that this is a timing issue. I believe that they'll be under a little bit more stress in Q2. Now, I know they guided higher, and that would kind of be egg on their face. But I believe there's a bit of a timing issue, or there's 2 macros happening, and we don't have a problem in cars, so that I would actually question, a little bit of the strategy, a bit of like, okay, I understand what we're doing. We're setting MSRPs to clear production because we've installed this capacity, but we at least have to understand real time what's happening in other auto and understand, is there something there that we could be missing? Is there an awareness problem? What's that? That sales strategy that got Tesla to 400K run rate per quarter, is that the same sales strategy that's going to get us to 500, 600, and 700K per quarter? I don't know the answer to that.
But I have one, and one thing I just want to point out, and this is really painful for me, but in this current environment, dealerships, which I hate, right? I hate everything about dealerships, but dealerships actually give them a buffer. Why? So the OEMs sell it to the dealers. The dealer has the direct contact with the client prior to signing. There's nobody more trained than car salespeople. I hate them. I'm so happy I can go on my website and order my Tesla and don't have to speak to anybody and just have to pick it up, right? But 95% of people still go into a dealership, try to negotiate, or are not the negotiating type, and Madame wants the red car, or Monsieur wants the one with the whatever lights or whatever, and then that's that. The car is sold, right? So this dealership has a buffer qualifying the client, understanding who needs to be negotiated with, who does not, can upsell all the services and all that crap. I'm very happy that Tesla does not have that, but that means we get data and client acquisition in currently one way only. And it's a very streamlined, this is not the right word, but I don't find a better one, brutal way. It's just, that's it. And I understand that it completely corresponds to the early adopters, right? I mean, we're all happy that we were doing that. But my big question is, does it correspond to leveling up, to now sell more cars to people who are less tech savvy, people who are more price conscious, people who don't go on the internet to order a car just because, without showing them, without taking them by the hand and walking them through it. I mean, most of us have come to the conclusion that we started talking about a year ago of educational ads or whatever. There are 116 videos on Tesla's website. You just put in Google Tesla video, you get to see all of them. I'm sure most people, even in the Twitter sphere, don't know about that. So how do you expect the non-crazy Twitter Tesla people to find them, the commoners, how I call them? So I just think they're not, with all the data and all the genius they are not understanding that there is a more uneducated potential buyer that needs to be taken by the hand and carried over the line, and that price alone will not do it. And I'm really disappointed that on that subject, there's just no open door, no open ear, no nothing. It's just, this is a no-go. We don't want to go there. And I'm not saying putting an ad on CNBC. That's not at all my thing. My easy solution was billboards in front of every Toyota dealer with the price, right? Something that's aggressive, but only to the price. Or, it's just, I don't know, better YouTube videos, maybe going through the influence. And the big one seems also to be bringing back referral fees so that current Tesla owners take other people for a ride, make sure they get the referral fee. So I think there's so much uncharted territory that could be helping now, rather than just pressing the price decrease. And I mean, I don't often agree with Gary, and you know how often I criticize him, but he's right. Price cuts are short-sighted sugar highs. They give you an immediate reaction on those that have been waiting for the price hike, the price cut, and then there you are, off it is, and you're the next tranche of potential buyers in that segment who are listening to that and making sure they monitor it. They're waiting for the next one, and you've missed all that big crowd that you could have gotten with the first one, and I do believe there is an issue here.
Okay, I just repeat again what I've been saying before. I believe that their strategy is price cuts until it's in every consumer's mind that it is the cost leader, price parity with ICE cars. Once everybody understands that electric vehicles are once and for all cheaper than ICE cars, gas cars, they're going to do a ton of advertising.
But how will they learn about it? How will they learn about it? I talk to people and nobody knows about it. In my real life, not in my Tesla life, nobody knows about it.
Production is a limit anyway, so you don't want to you got a production. You want to just sell everything you make, and anything above that, you don't need to do at this point, right? And so you're just managing to that. Why are you laughing, Jeff?
I'm sorry, and I need to apologize. I read some of the comments, and some of them are they're funny.
I'm old school. I'm old school, Tommy. These words are great.
I appreciate our listeners. I put it that way. They make me laugh.
I just want to point out that like you're not wrong about analyzing what Tesla is doing, and I think that as the backlog has come down with the interest rates on to put the car on the loan, it's caused that backlog to reduce, and so Tesla is not really focused on this like short term solve the they're just trying to match pricing with the cost of the vehicle, and they're not. It hasn't been their MO to do commercials or to advertise in the traditional way. I think there is something to be said about people, or Tesla wanting people to understand the company and understand that this is the best product. And I just kind of compared to the iPhone. And there's people that won't buy an iPhone, or they love their BlackBerry a lot. Like look at our demographic. We have two people with Samsungs, two with iPhones, and I have both. And so you're gonna have this mix of people that will figure out Tesla. I think I see the frustration. I just think Tesla's playing the long game, and I look at like Christian has a short golf game. He can make those putts. Where everyone else is just grabbing a big club and just swinging, because overall it's very easy to see that Tesla is going to be the biggest company in the world. But trying to nail these short-term things is very difficult. But like I kind of agree with Herbert. I know you're going to hate it, but I agree that like short-term, people need to know that Tesla is the safest vehicle in the world, so that they could continue to make that big move up in car, the Tesla stretch. So I never thought I'd own a Model X and a Model Y Performance at the same time. It's stupid. It's a stupid waste of money. But to me, I value my family's safety and my safety more than I value money. So I'm willing to just YOLO, right? I might not be around tomorrow, so I want to enjoy the ride more than the destination, and I think that's where the difference comes in. But ultimately, if they are looking to increase volumes while they're growing these factories, they're just. I haven't lost trust in management. I think it's a very intelligent way that they're handling it. It's short term, the stock's going to do what it's going to do. It's a buying opportunity, but long term, it's the right play. So I just think it's like great to have these discussions of the debate, but I really don't like the some of these comments like personal attacks for people. On this panel and on Twitter. I think it's unnecessary. I think if anything, just learn from, take what you can from everyone, and then just leave the bad stuff. If you don't agree with it, that's cool. But that is the beauty of Twitter. I love that Elon has bought it, and we can have the debate on everything. And not be too sensitive about it. I'm not offended. And Christian, I'm glad you're seeing the positive of what the community is saying, and just please ignore all the negative stuff.
Oh yeah, it's fine. But I will say to the point of like Tesla's mission, right, is to get everyone to know about this product. Like what you're doing, even in the short to medium term, what Tesla's saying by saying we're not going to go outside of our little universe, people that discover it, what you're saying is it's okay if someone who would love the product in Iowa or in Nebraska doesn't buy it, doesn't get their family in it to save their life. It's not worth me somehow to find a way to reach them. Now, not all of them will be receptive to it, but there's enough people that ad spend would be, or that educational spend would be receptive to it. So what you're saying is we just want the people that are smart enough to figure it out. And we'll get to all the dummies later, instead of saying, well, dummies, they should live too. Maybe we want to get them in a safe car. All we got to say is we're the safest car in the world. Run it through some Facebook ads. I don't know digital ads. Like, I know he hates Facebook. Like I said, we're running into all these little barriers, so we can't do stuff. But maybe somebody would say, wow, I could charge in my garage. This is the safest car. I just got married and she's pregnant. So I want to put them in a Tesla, but I never knew it. And they see that little Facebook thing that might cost peanuts, and it might get them to buy the car. So that's something to consider. I don't know.
It's funny that you chose Facebook, because
I just made that up. Instagram.
No, I mean,
Spotify,
my point is that
whatever.
you're talking about social media marketing, which, oh my God, Tesla's the
Tesla's
greatest in
I'm not
social
on
media
Facebook.
marketing.
I don't know. Okay, so they do ads on Facebook?
No, not ads, but the social media marketing capability of Tesla right now is the best of any company.
Okay, so there's people on Facebook talking about Tesla like Twitter all day. Just
the
Tesla,
conversation is happening with Twitter every day. Social media
then
is not the issue.
Ignore all that.
Yeah, you're talking about traditional advertising, what people are saying is missing. And I'm not against advertising. I think they should be doing it. But I'm also, the biggest way to grow your market is the small price cut that can have outsized market growth. That's called, the elasticity of demand.
If they do that strategy, I want them to go even lower. What I'm saying is they're too high.
They are.
We need to go lower because we got margin to play with. I say bring it down another 5,000, take the operating margins to 4 or 5, and according to Elon, we're going to just grow. And according to you, we're going to just grow the demand pie, because now we're not knocking it down another 5,000. And our operating margins, our gross margins might go to 12%. And our operating margins might go to 4 or 3%. So we'll still be profitable, but millions more people are going to be able to afford the car. So why stop here? Why not go a few thousand lower?
I still want to see the proof of price elasticity. I hope I see it, because I really want to be the confirmation. And we, at the moment, we don't have it yet. You just don't have this feeling that by lowering the price, something happens at the moment. And I think the price is actually not the issue. It's the communication on the price that's the issue.
Because the price is still very high. That's why. You guys, we're just back to where it was at 2018. And then there's the Model 3 Highland that's going to come out.
I know, but Herbert, the OEM prices, as we just learned from GM, are still historically high. So the fact that the Teslas got lower, even though it's 2019 level, they are now very competitive with OEMs, and there is no communication. People don't know about it. We know about it. We hammer it where we can.
Yeah, I'm not against
it's not out
communication.
there. Okay.
I agree with you. I agree that there's not out there. Not everybody knows about it. They need to know about it. They should advertise. I'm not against that, but I'm also not against the price cuts. And I think that they were pushed to the wall for the price cuts, by the way. I'm not saying that, oh my God, they had strategized to do this. I told you what happened. They built the factories. They produced the production. They had the macro hit them, and they need to cut the prices. But they're going to go ahead and do it anyways because they need to increase the volume, and that's this trade-off. It wasn't like they had this idea that I was going to cut the prices now. They needed to. So
sure, I need to empty the lots. Sure, yeah.
I think at the end of the day, short-term pain for all of us this year, but incredibly higher. I tell you, this is what I'm trading, right? Margin cut this year for even higher margins and higher volumes and higher sales next year than if they didn't do the price cuts this year.
My question, do you still dollar cost average this year, or do you wait to get it lower?
It's up to your financials, your situation. Of course, it's up to you what you want to do. I think that, all I'm telling to you, what I'm doing, as I explained to everybody what I'm doing right now, is I'm switching everything to Roth as much as I can. I'm taking advantage of the low price now, take the hit on tax, which means cash outlay, but not straight out buying. I'm going to do everything at the Roth because, oh my God, this is going to be the greatest gain that I don't have to pay taxes on. That's what I'm going to do. I'm going to try to make it. And I haven't taken advantage of my Roth for a long time. And so I need to make that transfer. So
that's very smart of you.
It's up to you guys what you want to do. But I don't know. So if somebody says to me, is it fair? Is a stock price fair today? My answer is it's not fair today, but I can also answer the same way, which is it's fair today. If you look at it as car company, it's not hitting the 50% gross margin, the 20% gross margin, 30% gross margin is not hitting 20% auto gross margin. It's not hitting the 50% growth this year. It's not. So no, but this is a macro. So once this goes away and we're back to growth again, we're so well positioned with two friggin' 80, 90%, 100% scaled factories. With a third, there's going to be additional investments in a mega pack factory and all that stuff. And they're all going to generate tremendous amount of cash, tremendous amount of margins. Don't worry about that. The margins will be better once they go with the Model 3 Highland. And once they get the Gen 3 car, all of this is coming. Margins will be fine.
Can we talk
but
a bit
next year, margins will be compressed again, by the way. Just to be clear, it's going to be compressed again. So I'm fine with your planning, Christian.
No, you're fine. So I was going to say, like, go ahead, Jeff. Go ahead, Jeff.
I was just going to say,
ahead,
like, just getting to the timing element, Christian, is just when I look at the second half of this year. First off, macro, I don't know what's going to happen. I think you should kind of put yourself on a hand and like say, well, this is.
I don't know what's happened, but I have an opinion about what'll happen.
yeah, exactly. Yeah. You should have an opinion as an investor about what's going to happen, and then you act on that opinion. Yeah. But for Tesla, I just see them. They added the Model Y standard range in the portfolio. They're going to add the Model 3 long range back, which was a big runner for them that they've taken offline. And of course, the CyberTruck is going to be added. And I believe that's going to be a driving billboard around. So this is all happening within the next, the Model Y is already up. In the next 90 to 120 days, maybe, a little bit longer. So for me, it'd be a little bit, I would be concerned. But it's, to me, it's not an all or nothing thing. This is why I think these conversations get so hyperbolic. I know you went all the way out, but for many people, they may say, okay, maybe this is where I trade the fringe of my portfolio.
Yeah, absolutely.
And I do 10% and then I try to buy in later. I mean, I think everybody's kind of got a different approach. And I think people on Twitter, I like Xander's point, I think should kind of be respectful that everybody's coming from a different position. I think everybody's allowed their own opinions, but I think the point that Herbert was making is you're not allowed your own facts. I think the facts need to be clear. And if we disagree on the facts, then let's debate the facts of the company.
I agree. And I'm trying to be also fact. I'm not trying to just make up stuff. Like I'm trying to say Q4, I'm trying to put some fact. I'm not an expert, but I try to use facts. I try to see what management says. So when GM guides and says everything's kind of fine, they may be wrong and maybe they're lying. But when they say it's fine, but then Elon's talking about, like I said, unnecessarily maybe scaring investors. I'm willing to take this down to zero. Well, if there's like a 1% chance he's taking it to zero, is it really worth telling everyone, hey, I'm going to take it down to zero if I have to and be like a big shot about it? Like, I don't understand why the language. So it gets me thinking maybe he is going to take it closer to zero. And Elon has said it on the call you were on, Jeff, on the space, that the bad macro. So what is Elon has been talking about? He's been tweeting about this bad macro. I know you're not saying there's that much of a bad macro. So what is Elon trying to accomplish by telling us we are going for this bad macro? He keeps talking about it. You're not saying
questions also.
Yeah, I know, but he's very vocal about it.
Happening?
He stated it about a lot of times. Has he not? Is that a fact?
What's happening is he's very upset with the Fed that's continuing to increase the rates. Every time they increase the rates, it's equivalent to raising the price of the car. So even though you guys, why did they lower the price of the car? Well, the price of the car went up.
Complaining about it. No, you don't see Jim Farley talking about it. You don't see this one talking about it.
Don't compare. That's fine. I don't want. Okay, fine. All I'm just saying.
I'm not trying to be controversial. I'm just saying, why is he so adamant about? Oh my God, this is the worst thing ever. Like he's Tesla. He should show confidence. Say, we're Tesla. We got the greatest product. We got the Inflation Reduction Act, which is going to help our product be more cheaper. We're going to lower prices, but we got great demand for our product. We're going to grow, make a big guidance. Maybe we're going to grow 20 to 40%, give a wide swath. I might have more confidence. But instead, he's saying, I'll take it to zero if I have to. He said that on the space. He said it again on the conference call. I don't have a crystal ball. He's giving me no confidence. So what you're saying is, Chris,
Yes,
just
no
know
control of the
it's great.
economy.
Tesla's the
The
best. It's a
the
10x, like
Fed's
Kathy
talking
Wood
about
says, in 5 years. I want management to, I want to be spoon-fed a little bit. I want a little bit more
they're
something.
wrong because the Fed increases the rates 2 points, and you're going to be like, why? Because you
No,
can't be.
I'm not. I'm going to say, no, if the Fed increases 25 basis points,
2
cause
points.
Tesla sales to crash 30%, then he's got a demand problem, okay? He's got a problem. Maybe he's got a problem and
when
you
the
don't think
Fed
he has a
increases it,
problem.
which he doesn't control, Christian, and that's what he's communicating to them. If they do this, and I'm already telling them not to do this, and they keep doing it.
No
what's gonna
CEO in the S&P 500 controls what Jay Powell does. It doesn't matter to what Elon Musk and Jay Powell. He should leave him alone. He should run the business the best way he knows what. You cannot complain, like Gary Black says. I agree with him here. You can't every day or every quarter blame the Fed chair about your business. Okay, it is what it is. You got to deal with it. And if Tesla's this juggernaut you're talking about, the EV revolution, he's got an IRA credit. He should be able to manage it without saying the end of the world's coming every day.
Yeah, I agree with that. I think that the if I can be critical, I mean, for one point, are these statements on the earnings call, and you got to be able to qualify these statements and understand, like, everybody's in that same macro. So if everybody's in that same macro, you've got to understand, like, what that means for your business and what that means for kind of macro overall. So it's a difficult thing. It's one thing to say, like, look, macro is an issue, and I think a lot of actually S&P CEOs are coming on conference calls and saying that macro is an issue. But it's kind of like, okay, now you put that aside, like, this is how we think our business is going to operate, given this macro. And this is kind of, here's the range. Here's like what could happen. I wish kind of on gross margins, it would have been a little bit more of a range that was forecasted. But I mean, again, we're kind of, Monday morning quarterbacking everything. But yeah, in terms of the conference calls, I do think, the comms need to be tightened up for that type of call.
Agreed.
Yeah, and again, this is just my opinion. Like I said, like, I'm going to listen to the calls tonight. I'm going to, like, we haven't gotten the macro. That's the thing. We love talking about macro. We're not going to talk about macro today, but, you're right. Businesses operate and stocks could do well in a tough macro environment, right? A lot has been discounted, right? And if we don't get this recession that everybody's talking about, maybe it is a soft landing. But as I've been saying, we don't know it to the either, right? We still have inflation of 5%. Maybe the Fed and the economy is doing well. We got the lowest unemployment ever. Maybe the Fed doesn't stop at 5.25% like everyone's thinking. Maybe it's 6% is the new Fed funds rate. And the market will discount that and say, oh, God, it's going to go up another full point and earnings are going to be hit a little bit more. And maybe these stock prices will come down because right now they're being highly valued. So you also have to take that. You can't take everything in a day. You have to look out at least 3, 6, 9, 12 months. And I don't see the macro getting that much better. So when I hear Elon talking about the macro being so bad, and I think the Fed's going to continue to raise rates at least once, 2, maybe 3 more times, I'm going to get even more nervous about the Tesla business because now we're going to be at maybe 5.5% on the Fed funds rate and, things of that nature. And also in the GM call, did I get this wrong? You know better than me. It looks like they're doing financing at 2.9%, right? So are they doing some strategic things to move product at better interest rates to get cars out the door? Did I see that right? And Tesla doesn't really do anything like that, right? They just go with whatever the bank will give them on the financing. They don't give any special financing like 2% or 3% or 4%. Does that mean anything to anyone?
You're right. They're doing very limited financing. In the new 10Q that came out, the number had increased a little bit, but I have the feeling that's actually more happening in China and in Europe than it is happening in the US. And one of my proposals on the same evening after the earnings call was that if price is the issue, meaning monthly affordability, because most car buyers, either they lease or they finance. There's only a small proportion that pay cash straight out. If the issue is the monthly payment for either of those, well, then Tesla should be the one rather than just playing the intermediary between a bank and the client. And maybe it's much cheaper to actually do aggressive financing rates that you can do by playing the curve, right, and by doing some arbitraging, then lowering the car price, because that's final, right? That's then done, and then communicate on the monthly affordability of the price.
No, I think this has been a great talk. I don't know if anyone wants to, where we want to go, or do we want to sum up kind of what some of the comments are? What is the basic? Go ahead.
Yeah, I wanted to add one thing, because I've been screaming now for an hour and a half that they're not advertising and not marketing. Well, they are marketing, because they've brought out in Europe this Giga beer for 89 euros. That's $100 for a liter of beer, 3 little bottles of 330 milliliters. And so I've watched quite a couple of reviews of those, because obviously it comes from Berlin, so it's mainly German buyers and German reviews, which have been a disaster. There was not one review that glorified the beer, and everybody was like, how crazy must you be to buy for $100 3 little bottles of beer and blah 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 blah. So I ordered some. It had to come to France, been shipped here now. Now let's see whether it gets through the import border or not. But I mean, for a Tesla fan, spending $100 for something cute, I don't think is any problem. But it shows how far they are in their world, right? It's just ridiculous. Let's name it, because this has a targeted market. These people will buy it, but the bad press that you get out of it, because it is so ridiculously expensive and because it's just so useless for the normal people, gives you actually so much more backlash that's not worth it. That I'm sitting there and going, oh my gosh, anybody understand anything about marketing, communication, getting your so you try to lower the price of the car, but you're putting out the most expensive beer that has ever been there.
Genius,
right?
Yeah,
right? I mean, it's just
5
it's
feet
wrong,
chest,
right?
Alexandra.
It is crazy.
No, it's wrong. It's just wrong. It's stupid. It's stupidly, unimportantly wrong.
But it's fun. Christian, I had a question for you. What do you think it'll take to get multiple expansion? Because clearly we're contracting. But what are the flags that you're looking for where you go, ooh, okay, I think Tesla's or other companies. Share your thoughts.
Well, we're getting multiple expansion in other companies. It's just not Tesla. Chipotle's doing well. I'm looking at Lululemon. They've been doing well. There's other companies that are growth companies that have been going up in this interim. When Tesla's down, whatever, 10, 15%, they're up like 10% in the last week or two.
Did you say Chipotle is a growth company?
Yeah, they're considered a growth. They grow.
Okay, I guess.
I'm just giving you companies that are doing well in the environment. Tesla is not. Tesla over the last couple weeks, and from their there's companies like McDonald's. Look, I'm just trying to, investing is a big part of this. There's companies, boring companies like that McDonald's, that are trading at like crazy multiples. They're at 52-week highs. They're trading at 11 times sales. These things will eventually come back to earth, but Tesla is still 50+% off their all-time high. So there are companies in this tough environment. I understand McDonald's is low for the consumers, easier to get, but there are premium brands like Chipotle that is expensive, a burrito, Lululemon expensive, that are thriving. So what I'm saying is Tesla is a car, so it's a higher product. I get that, but what I'm trying to say is, like, there are things doing well. So in my universe, I'm going more for the easier target. I don't want controversy. I don't want Elon on Twitter with messing around with politics anymore. I don't want conference calls. And I know Herbert's not going to like this. They say one thing and we get a completely different thing. There's easier low-hanging fruit I can buy with no stress, not worrying about the CEO. They actually care about the shareholders. I can go there than rather dealing with a big position on Elon, and he's going to do whatever he wants. Yeah, wait till 2030, everything will be fine. I'm not doing that. I've already done well with Tesla, and right now I'm not happy with the way things are going and the way management is going about, and the board. I've been critical about the board. I believe Elon Musk runs that board. There is no check on him at the moment. That's what I believe. You could say, well, whatever. I don't believe that the board is a responsible board. So again, I take my capital and I say, right now, I can't invest in this company because I don't believe in what they're doing. And I don't believe how they're treating shareholders is the right way to go about it. So that's just a decision I've made, and I'll make something different in the future. But as of now, there's much more companies, easier companies to invest in, much less geopolitical risk with China and things of that nature that I don't have to pull my hair out worrying about every day, having a position on, because I know either they're more domestically based in the U.S., so there's no geopolitical risk. Maybe their CEO is less controversial, so I don't have to worry about that. So these are things that I like. Buybacks are a big thing in this environment. When the Fed raises rates, a company like Google is a great company because I know they're going to have shareholders back and they're going to come in with a $70 billion buyback. I'm glad Herbert's having a big fun of it. But I think I'm making some good points and a lot of people can learn from it.
He's in disbelief, but
you're all in on Tesla and you're drowning.
So short term, it makes a lot of sense. It makes a lot of sense of your rationale. I could actually agree with it. So if FSD, is solved or a robot comes out, what are the, because it seems like you're just short term.
That's not happening anytime soon. So that's what they're saying, Xander. See, I can't. When I've invested,
will you
Tesla,
return?
It was
I guess the question is, what will it take for you to return? Is my question.
So my thesis on Tesla was very simple. The other stuff were call options, FSD, bot. Well, bot I didn't even know about till recently, like when I have it. So it was basically an EV story. It was a growth story, and it was a margin story, profits, earnings machine. Well, Elon's turned the earnings machine into I'll run it at break even if I have to. And that's not the tagline that I started with. It was an earnings machine. It's no longer an earnings machine. I get it. 2 years from now, 3 years from now, it will be. Well, right now it's not. So Elon's willing to sacrifice earnings, free cash flow for, volume. And I get it. So I'm not a big believer in the shaver thing because to me, FSD might work, but it might not. I am not sold on FSD. He's been promising it every year. And maybe 1 year he gets it. And if he's right, it will be a game changer. But there's a lot of regulatory hurdles to get through. There's a lot of politics to get through. And then there's just a lot of proving it out. He said it again today. We could be done this year. Maybe it is. And if it is, then so be it. But I think it's still another 2-3 years out minimum. So with that philosophy, I don't worry about, get as many cars out because then we just turn the FSD on and we've made a lot of money. So if I was there, I would agree with you. I would need to be in the stock because FSD is going to be solved in 6 months. I'm not there. So that's my theory, yeah.
So if the market's forward-looking, so you're saying that if the market is forward-looking, it like none of these opportunity things are worth it. You're not willing to, even if you hear that, CyberTrucks are, selling like hotcakes and they're producing them very, very quickly or they're ramping very quickly. Like none of these things will attract you back if you want to bring it back to cars and then some of these no, other things are not good.
That's a great point, and Jeff talked about it, so I'll just go real quick about this. So CyberTruck could be something that if I see happen, but again, this is just me, not everyone out there. This is just me talking. You could take it for what it's worth. To me, management has said, Elon said, we're going to do an event, I think the end of Q3, right? What is that, September, October at time? Okay. I want to say it now because I don't believe him. I think CyberTruck could get pushed to Q4. I don't know. Maybe it doesn't, but there's been enough calls of what they say doesn't happen. I will question now if CyberTruck's on time. It's already been delayed a lot. And do I think it could go to like November because something happens or something? Of course. Now, is there a reason why it'll happen? I'm sure. Is there something, a part missing? They couldn't do this. It's new technology. Give them a break. I get all that. But they've set the line. He said Q3 will have a ceremony event. So if the event now goes to December or something, again, it's something said and it didn't happen. And again, I understand that. I've invested through it before, but I'm kind of just getting tired of it. So maybe it happens, maybe it doesn't. But if CyberTruck, I see that the progress and the research I'm doing say it's on schedule. He's going to do like what he did with Model Y. He said Model Y would come out a certain time, and it was months ahead of schedule. And the market loved that. If that happened, yeah, I will reassess and go in there. But as of now, in my mind, I'm putting CyberTruck still being delayed because I don't want to be thinking it's going to be early and it's not, and it gets pushed back. That's just the way I'm thinking about it now. So I'm just
You
being
lost
honest.
trust. You said it. You lost trust, and that makes a lot of sense.
I lost trust.
I respect that.
I'm not saying I'm right. I'm not saying I'm right. I'm giving you my perspective. That's all. I may be wrong.
Well, I guess I can't help myself, but I do need to address some of the things you said. Just I can't
didn't
let
say
this
much.
end with your comments that I don't agree with, right? So you talked about the board. Pretty much this is the same board that saw this company succeed like through your wildest dreams, greater than any other company in the world. Okay.
Yes,
so
they
I
did.
don't have
I
any
give credit.
I do not have any concern about the board. There's certainly an issue of it being an Elon controlled board. That is a fact. And that is concerning. But in terms of their skill and management of what they've done, company's done pretty well. You talked about China geopolitical risk. You were a bull, and they were a China geopolitical risk at that
I
time.
always was nervous about it, though.
Things have
hasn't come out.
improved.
Yeah, go ahead.
Yeah, but things have actually improved, not worsened in the last several months with him announcing the Shanghai Mega Pack factory, him meeting with the executives. Things are going really, really good. So, that same storyline is what Jim Chanos, one of the biggest shorts, said the issue with is China is a geopolitical risk. If China is a geopolitical risk, don't invest in Apple. Don't invest in 90% of companies that matter because they have
one of the reasons, just comparing it with the other companies. I don't
understand.
That's all, Herbert. Yeah.
Number 3.
Defense position where I just think, oh my God, I can't stomach it at the moment with all in, so I take a little bit out. But alternatives, I don't see any alternatives on the horizon, but none. And it's not even a question of other automakers, just nothing. I just don't see it. I would be a portfolio manager today. Good thing I'm not anymore. I really would scramble putting 20, 30 stock together that I'd have to throw in there. I have no idea who I could trust in this whole thing. And completely with you. Meta, you must be joking. No way.
I'm not saying they're great investments either. What I'm saying, in this type of environment, a buyback is reassuring to investors. Yeah, so short term, you could do some things. And for Herbert, Xander, and I know Jeff's not all in, but he has a significant position from way back. Alexander, I respect you guys tremendously. Like I said, no matter under any circumstance, I could never be an all-in investor in one stock ever. Let me repeat this. I could never be an all investor in one equity ever, unless it's like an SPY, an ETF. So what you guys do, you guys are the hero investors, because I could not do it. Like the amount of, I could not sleep if it was like I'm not trying to scare you guys. Like I just couldn't do it because one thing comes out of the woodwork, one type of little event happens, and you could get massive declines that might last for a long time because it just can happen. And maybe it's a small % chance. So I just don't want to put myself in that kind of position. So I respect the hell out of you guys. And you guys, you're going to make the big returns. I'm not going to make the big returns like you guys are. But I've done well in the past. Now I'm kind of more of managing, and I'll take average returns and maybe a little bit above. I want to beat the S&P every year, but I don't need another 10x. I'll be just fine. But you guys, I got a lot of respect for you guys. I don't know how you do it.
Why don't we do closing comments? I do have another comment about FSD, but yeah. Anybody want to go through that? Is that? Do you want to say some more, Christian? Or
no? I just want to say.
Shall I start?
Yeah.
I just want to say this has been, a couple of months we've been doing this. I absolutely love all four of you. I think you all have merit and you all bring something to the table that very few have. I think Herbert had the toughest stance today because he's been hearing the four of us others. I mean, Sander was a little bit more measured than Jeff, Christian, and me have been going on since last Wednesday, cursing about this and cursing about that. And honestly, Herbert, you did a great job defending your position. So just want to make sure, we've all become friends, and I think we all value each other a lot, and this shall pass too. And I don't think we have any grief one for the other. We just respect each other's position. And if that could trigger through to Twitter, that so many others that are so aggressively defending their stance and nothing else, that'd be really great, because more we can agree to disagree and still respect the others, better we'll be off, and Tesla will be just fine. I'm not worried for Tesla in the 6-9 months horizon and largely after that. So the ones like me who have FOMO will get in maybe a bit too early. The other ones that are, smarter and quicker on their feet, like Christian, may do it a little bit later. I'm very convinced at the end of the year, Christian will be back in Tesla, and we'll take it from there.
You may be right. I love you too, Alexandra, and I love all you guys. And like I said, we have a good, vigorous debate, but guess what? We are friends, and I respect everyone. It doesn't mean you can't disagree and still respect and have a conversation civilly. I learned so much from the way you guys think, because I never thought that way. I never even thought a lot about building a huge position in one stock. And guess what? And from 2019, I learned so much from the community. So I love the Tesla community. I said that a million times from way back, watching the YouTube videos, learning. I didn't know anything about Tesla, and I learned about the opportunity. And I had enough gumption to put enough amount of money at the right time to benefit from it. So it's strategic. Yes, you're researching. You got the gumption to hang in there. I didn't have to wait like some people, like 4 or 5 years. So I might have not lasted 4 or 5 years. I might have said enough of this. So I might have not lasted. I got lucky in the sense of it took about 6 months for the story to play out rather than six years. So that's why a lot of time it is timing. So as much as we want to say time in the market, like a lot of returns, even over a 10-year period, timing does play a lot. The longer you go, timing becomes less relevant. But in a 10-year period, timing, even a 5-year, timing really is a lot of it, because if you catch Tesla at a 50 billion market cap and you go to $1 trillion, that's a 20x. But if you catch Tesla and you invest heavy at the trillion and it goes to, what was it, 300 billion, you're like, you put $1 million in and now you're sitting at 300,000. So now even if it 10x's, it goes to 3 million, but you started with $1 million. So you made a 3x and it might have took 10 years. So this is the way I think about things. So it does matter a little bit where you get in and where you get out. As much as we want to say we're long-term and everything will work out, there is math to what I'm talking about. It's not just like me just talking. There is math, basic math you can do about, return on the investment. Yeah.
When we get to my turn, I'll give you math.
Thank you,
Jeff.
Okay. Just a couple things. First off, I mean, Christian and Alexander are right. We talk all the time. We become friends. We disagree on things, and we talk through it, and then sometimes we continue to disagree after we've spoken through it, and that's actually normal. I would actually, it would be kind of abnormal if we were all kind of here kind of saying, the same thing and everything is going to be great. And by the way, that's not how Herbert is as well. Herbert challenges kind of the thinking on everything. So we all kind of bring a different piece to the puzzle, and I think it's okay. And I think it's okay in like the broader Twitterverse, to respect people, because they're all coming from different positions. They're all coming from different levels. People started investing in this company at different points in time. People have smaller or shorter time horizons. It's okay. From my perspective, I believe this is a very difficult stock to time in the long term. And that's why, that's kind of the position I've taken. I also believe when I look at the catalysts coming up through the remainder of the year, they're rather significant. Now, I don't think anybody, and I've said this before, it's very difficult to play out short-term stock price. I mean, you can kind of like gauge market sentiment, but it is a very difficult thing to do. Like I gave the example of everybody thought the NASDAQ and everybody thought the S&P would have a horrible first half. And turns out, that wasn't the case. And it was actually, the S&P was up 7% in the first quarter. So these things are very, very difficult to predict. But in looking ahead, I believe the COGS are coming down significantly. This takes time. It's not going to be this knife's edge thing that happens all in one quarter. It's going to play out over time. It's not going to take 5 or 10 quarters. It's going to take a couple. But I believe the COGS are coming down. There's data. There's openly available data on the web that says that that's going to happen. So, and I believe a lot of the things that are happening with pricing are a timing thing. These things take time. We talked about awareness, and we talked about advertising. I'm not sure, and nobody knows, like how many people actually know that these prices are what they are now and they were 20% higher 3 or 4 months ago. I don't know the answer to that question, but I do know that over time, the price of an EV and the price of a Tesla being equivalent to ICE, but having that much better performance and that much more convenience, I believe is going to win. Again, not in the 5 or 10 year long term. I believe, in the near term, it's just going to take a little bit of time to play out. And then I love the catalyst going forward for the company. But in terms of what individuals want to do with their positions, they should state their facts, state their opinions, and then we debate the facts, and we can, but the facts are the facts, and we should agree on a set of facts. And then in terms of opinion, I think that's where the debate comes in, and we can go back and forth on that healthily, and I think that's fine.
Yeah.
I want to say, I can't believe I get to hang out with you guys. Herbert finding Apple and finding Tesla. It's well, you make that face, but how many startups do you have? And so like having
Incredible.
people around.
Incredible.
Having like Jeff's experience with supply chains is incredible. The fact that I have access to this, and I get to be a part of the show, but all the people that are watching and as more figure out, like it's incredible. Alexandra's, she educated everyone on buybacks and Moody's, and like none of us knew anything about that. She came on the scene and it was like it was a game changer. And then you have someone here in Christian that is showing you exactly how to think about things if you're trying to invest wisely. And this is investing. This isn't just like I'm reminded of GameStop and AMC, right? Like diamond hands, baby. Let's just no. Like, I happened to catch AMC at the right time and made a little bit of money on it, in 4 days. But like, okay, so that's great. But that's not what Tesla is. Tesla is it's a different beast, and it's very, very volatile. And if Christian sees FSD actually like landing, I mean, I get to drive this car. He doesn't have the car. He doesn't know what it feels like. So
no clue.
So he doesn't have that bug. But at some point, right, like those fundamentals and all of the variables that make us bulls, we'll connect back again, even for Christian. But ultimately, it's incredible that we can have this kind of conversation. And I told you guys we should have recorded that Saturday call, because that was some fireworks. but and this was we make a lot of points, and people get to hear it. But I love it when we kind of get to go back and forth and just all the chippy stuff. So I'd love to have a call like that where we're just making jokes and everyone's laughing the whole time too.
Well, I'm glad I got to say the final say, but thank you guys for giving me that opportunity. So normally I am the moderator.
Maybe not.
And I'm normally the moderator, and in my channel, I am the interviewer. And the greatest insult somebody gave me, which I actually wear as a nice badge, as they said, I'm the dumbest in the room. And yeah, I consider myself the dumbest in the room in this group. And many times when I'm interviewing people, that's the whole point. I'm here to learn. But so here's, like my thinking, just to solidify the position of a Tesla investor, the way I think of things, right? So they continue to give the guidance of 1.8 to 2 million cars by the end of the year. You've lost your confidence in management. I have not, because this is something that management can control, which is production. In order to sell that's another matter, and they'll have to reduce price, maybe depending on the macro, but they'll probably hit the 1.8 to 2 million. The energy is coming up this end of this year. The projections are $2 billion of profit by the end of this year, not 2025, like the analysts have been predicting. And the analysts have not factored that into the stock price. $2 billion of profit this year is a significant add up to the margins that we're talking about. And like I said, by 2025, the margins will be equivalent in energy, will be equivalent to the margins of Tesla Auto today. So this is almost like a kind of like, you can almost straight line this. There's a lot of assumptions, but this is, most of the people I'm talking to who's following energy is looking very closely to it. And then let me ask you, one of the biggest things that we're saying we're reducing margins. Oh my God, this company's going to fail. But actually, what they're saying is, they made a big bet on FSD, and many people, I'd say the vast majority of the audience and us here, don't believe that FSD is going to come for 2 years or longer. So let me ask you guys a question. How many of you, what percentage chance did you give that this year that AI will actually beat the Turing test? What percentage chance did you guys give that this was a year that it was going to happen? 0%, right? Yeah.
Not at all. You guys know. Sure.
You knew that GPT-4 has already done that now. And even the smartest guy, Ray Kurzweil, was thinking 2029. Okay. So what percentage chance do you give FSD becoming as safer than human or 10 times safer than human by the end of this year? And people will say 0%, 5%, something like that, right? But the way things work is that one more release and it's an exponential curve of potential solution. So it may not happen. I'm not saying it's going to happen, but when it does happen, my number to you, Christian, is not just a 3 times growth. This is going to be a 10x growth. It's going to be a 20x growth. It could be a 30x growth. So if
I agree with you. If they nail that, it's a big bagger. Yeah.
And it doesn't have to be solved, and it doesn't have to be regulations coming. It needs to be something similar to what GPT happened, right? All of a sudden, in a matter of 1 month, the entire world's narrative changed. All of a sudden, they realize, before that month, everybody was saying, talk to me when autocomplete is better than what it's doing now. It's not going to happen, okay? Then all of a sudden in a month, everybody realized, holy shit, this thing's here. Is it general AI? No, it's nowhere near that. It makes tons of mistakes. But now everybody's going, oh my God, I can see that general AI is coming. Let's talk about consciousness. Let's talk about, humanity being destroyed. In 1 month, the narrative about FSD can change. When all of a sudden the conversation becomes, this thing is basically solved a lot of the simple errors that it's making right now. So when that happens, it could change quickly the narrative and before all these things happen. Anyways, that is a possibility. It may not happen, but it can happen. So anyways, I just want to leave that with the, people who are invested in Tesla. I know it's painful. The last year, the stock has fallen. I'm in pain. Christian is many ways correct. He's taught me so much. And I can sell some of my stock. It's nothing wrong with selling Tesla stock. There's one comment I have: a Tesla bull never sells stock. No, I don't agree with that. But I also don't agree with the statements that were made sometimes about losing confidence in management, the board, guidance, the potential production failure, all those stuff. Hey, let's talk about it, because I don't agree with those statements. Anyways, okay, thank you, everybody.
Let me just say one more thing, Herbert. I loved your ending. I'm not trying to steal anything. I want to say that, this was a great conversation. There's sun coming in. I'm learning every day. I do not have this figured out. When I talk, I have to have conviction in what I'm saying. Otherwise, I won't be able to make any decisions. So when I say something, at the moment, I believe it to be not true. I believe it to be, I'm comfortable with what I'm saying and I'm executing the plan that I have laid out for myself, which can change on quickly if something happens. So my thing is, I'm continually learning. I love to read. I love to learn from these guys right here. I love to get information, and I'm constantly learning. Everybody should always be constantly learning and not try to stay in some dogma and just stay stuck there. And I believe this, and I'll stay here for 50 years until, I'm not saying this is going to happen. I'm saying in anything, this is important not to stay stuck, because I've met a lot of people that they believe something, and when that thing doesn't happen, even though it might go another 15, they still, hoping for the best, still trying to play the lottery every day, even though the chances of winning lottery, I'm just giving an analogy. So always open up your mind. I love hearing the opposite point of views, because then maybe I will change my mind if I hear a compelling case why I have it wrong. So I love to hear the opposite side. I love to hear cogent discussion. I love that. I live for that stuff. I don't need to be right. I'm giving my opinion based on certain facts, and I may be wrong, or I may be right. But I love to hear intelligent people talk about the subject, because I'm constantly learning. And like I said, I don't have all the answers. I'm limited in what I can do each day as well, with information and stuff like that. So I just want to say that for everyone out there, constantly keep learning, go to good sources, people you trust, and then also do your due diligence, because even the smartest person in the world, they get it wrong all the time. They get it wrong literally all the time. They pick stocks, some they hit good, they could go on a streak for a few years and pick a lot of duds. So just understand that not everything in the world is guaranteed. Just because where we might be in a little bit of an echo chamber, break out of that echo chamber every once in a while, see what's going on, maybe what you thought isn't quite what you thought everybody knows. Maybe everybody doesn't know what you know, and you think everyone does know it, and you're shocked sometimes. So I don't know. I just wanted to end on that. I think that was a good way just to say,
Thanks.
open your horizons, get out there a little bit more, and don't stay so focused on your little thing. Yeah.
Okay. Well, we are still CyberBulls, and Christian is certainly a big part of this, and we all are. Appreciate it. Every Tuesday at 1 p.m. Pacific time, please join us and submit your questions and answers and comments. We love you all. Thanks, everybody.
Thanks, guys.
Bye-bye.
Love it.
Thanks a lot, Herb.